All right. Good morning, everyone. Hope you're
Good
doing
morning.
Good
How
morning.
are you guys? Monday morning already. Time for some market movers.
Yes, let's do this. We got Michael in the background as well. Michael, do you want me to add you? All right, Michael. Those of you in
Hello.
the Discord knows
Hey.
all about this guy, right?
Hey,
How's it going,
good to
Michael?
see you.
Welcome.
Good to
Yeah,
see
I'm
you.
good. I'm good.
So,
I'm very
Michael, are you
happy. I'm
like
having a.
officially? Should I introduce you as like Michael from ABL, Alpha Beta Labs? Probably
I don't
should.
know. Yeah, I guess so. Yeah. I mean,
Yeah.
that's. It's a little known secret that there's something coming. So.
Okay. Okay. Maybe I
Yeah.
should
So
have
I don't know
introduced
anything.
you then.
I don't know anything.
we did a random live on the YouTube last Friday, and we're doing lives every day, almost on the YouTube. So word will get out, no doubt. So
Yeah, I
so
think
yeah, people.
I talked with Alex over the weekend, and I think we're going to be adding you and Alex as a specific section on Tuesday. So I'm
Cool.
looking forward to that. Have your own little ABL segment. And for everyone who's watching, who's tuning in right now, I just want to say that we're the goal here is to create a feeling of a truly of a live trading floor where if you're trading, we want you in here, sharing your ideas, trading with us and talking, discussing ideas with us. So if you do have a decent camera and a decent mic and you want to get on here and trade with us and show your face and be part of the discussions, you can always send an email to tradingroom at the5ers.com and we'll get you in. The more people, the better, right? That's
Absolutely.
yeah.
Absolutely. I agree.
So Dirk, what are we looking at today? I'm gonna get your screen up.
Yeah, get my screen up. Let's maybe start with what has happened since Friday a little bit to see where we are this morning in terms of Forex, in terms, whenever I'm on, I'm going to speak about crypto, obviously, too. I want to touch base on a couple of things we can expect for this week. We have an inflation report due, a US inflation report due on, I believe, Wednesday. So that's going to be a biggie at, well, my computer is set here to Shanghai time, but inflation, I think it's going to be at 2:30 CET. Correct me if I'm wrong. Report. This is definitely going to be a big one again, especially after what we saw last week from the non-farm payrolls. You guys remember maybe they came in a little bit less than expected, so less newly created jobs. Let's have a quick look here. We saw 143,000. The expectation was 170,000. Market did not react as euphoric as I would have anticipated, honestly speaking. I mean, we kind of, if you watched our show here, Mondays to Wednesdays, you kind of knew already what to expect. We talked about this since the JOLTS job opening came in a little bit lower than expected. Most of the time, you kind of see this reflected also in the non-farm payrolls. However, I kind of have a feeling, when one number is out of a system, people are kind of expecting or anticipating, being anxious about the next number again, which obviously is going to be inflation. Why is that so important? Of course, because everybody wants, the market has been addicted to cheap money since 2008, since the financial crisis. The market was used to a lot of was used to a lot. Sorry, I was a bit put off by the comment. I hate this type of traders with a lot of indicators. I'm going to go into that later. Don't worry, mate. And,
really? I love that. That's
a good comment.
Do not remove that. If the moderator watches this, like, do not remove that. We
Everybody's
love that.
okay. We all look at different things, and so the Fed, of course, would like to see inflation going down to about 2% again. Morning, Victor. And
good morning.
Yeah, we're going to see if that happens. So if we see lower inflation, we can expect probably sooner than later a new interest rate cut by the Fed. But I want to go look a little bit in the history for a couple of minutes later today also, because I think the setup we are seeing at the moment, inflation, reminds me a lot of what we saw very far in the past, to be more specific, in the midst of the 70s. So let's quickly look at some assets first. Euro dollar, again, with a gap opening. This is actually why I was showing the chart, not because I want to show you my beautiful indicators here. So we saw last night euro dollar opening again here with almost a 30 pip gap, second week in a row that we see stuff like this. We've since then closed the gap again. I think the market's probably going to stay rather quiet there until we see the US coming in later. Let's have a look here at the daily charts to kind of determine where we are. And if you see me analyzing daily charts, you might have noticed that I, in trending markets, at least like to work a lot with these three moving averages here, which is on a daily chart, the blue line, a weekly moving average, 8 weeks moving average to be more precise, plus these two indicators here, which consist of a simple 20 weeks moving average and
Mike,
a 21.
sorry to just interrupt here, but Mike, I think there's a background noise. Maybe you can mute your mic when you're not talking.
I already did.
I'm muted.
Oh, okay. Thank you.
All right, thanks. And so these both put together are called bull market support bands. You can either add them yourself, or you can go here to indicator and look for it. I think it's somebody bull market support bands here. Already pre-coded that already to add on there. These are very useful when we are in trending markets, like, for example, we've seen in Bitcoin, because what tends to happen is if the price of Bitcoin, this is not just true for Bitcoin, I'm going to show this to you also on another asset today, deviates too far from the bull market support bands, like, for example, here, like we've also seen recently during this weird phase we're going through at the moment. So whenever it's like above 20%, approaching 30%, you can be pretty sure sooner or later to at least see Bitcoin going into this kind of sideways correction that we are seeing right now. And this is actually good, because it's always good to see the market cooling off a little bit after large moves, because the opposite or the alternative to that happening would be that it drops like super fast again, and then people start panicking. I think a lot of people are panicking at the moment when it comes to Bitcoin again. So I kind of expect that if there is nothing surprising news-wise coming out this week, which totally, puts the euphoria again into the crypto market, that we are somewhere consolidating maybe between 100K and these two moving average, the bull market support bands, which are currently trading between 88 and 89,000 US dollars. On the candle close today, they will be updated. That's why I say here probably around 89,000 US dollars. So should we see really a pull down to that area this week, this for me would be a good area to go long again with a little swing trade. If that is broken, then like severely broken to the downside, well, then we would have a scenario where we can discuss, is this the end of a bull market prematurely? Was like 100, I think 108,000 roundabout was the top. Was that the new all-time top? And we are now starting, maybe not immediately into a severe bear market, but into something more boring, sideways, slowly going downwards market. Time will tell. I don't expect that because we're still very much in the path of my logarithmic regression here. I said it over and over again. I'm going to repeat it until it happens, or this model is invalidated. That's the alternative, of course. Again, I expect the cycle top somewhere between late April and October 2025, and then something probably will happen that will kind of shake the markets. More on that later, though. Quick look also here on stocks. So these bull market support bands work on any trending assets, to be honest. It's like a pattern you see over and over again. A couple of weeks ago when we were here, I actually did a video on my channel on this and said, well, according to this logic, you should buy now. It was wonderful to buy there. And this is the strategy, at least for swing trades, I follow in stocks too. I keep on buying when we touch these bull market support bands until the structure sooner or later will break. So until we see something like we saw in Bitcoin, for the bear market, for example, back then, until we saw that this bear market structure went into a sideways structure and then into an up structure. So this is important, in my opinion, when you're more on the long-term side. Long-term, I mean now, in this case, you want to hold on for a couple of months to your stocks, to your crypto, whatever. Go with the trend. Don't try to be a contrarian here. Normally, it doesn't end good, especially in strong trending assets like stocks are. We see that especially here in the Nasdaq 500. Look how it always, with exceptions, of course, respected the bull market support bands. And you don't want to bet against that, for the moment at least. It's a different story, of course, in euro dollar right now. And I think euro dollar is really almost textbook how you can define a structure and a break in structure. When we had this large area, this large time of where the US dollar went very strong. Then we saw a break in structure, went into the sideways channel, and it kind of looks right now, at least if we're deflected up here at the bull markets, or in this case, bear market support bands, works, of course, in a downtrend again, that we could be in a bear market structure. Jonathan, of course, had some pretty good ideas on this last week too, where he said like the dollar's going to probably become weaker. I would like to continue that discussion actually later with you, because I found that very interesting. But it's interesting times, to trade at the moment, because we also see this deviation still of risk on assets performing very good, but the US dollar getting stronger. And this is because of a component, of course, Donald Trump. Because once again, yesterday, we had Donald Trump saying, what was it, on steel and aluminum, I think tariffs are going to go into effect immediately, 25%. So everything is going to be tax coming into the USA probably now, with, I think, what his long-term plan actually is there to get rid of the individual tax burden of US citizens then, and to finance the complete government of tariffs. However, that is going to work out, I don't know yet, but I'm sure he and his little doggy Elon Musk, they have a great plan.
Doggy.
Sorry.
I like that. You know what? Like, I feel like we need to we need to comment the elephant in the room here. So we have two people in the comments with very, very interesting comments right here. So first we got MK Sports Central 1 says, I hate these types of traders. Your chart is full of indicators. And then if you scroll down, we have another one. I hate with indicators because your only one chart can destroy a beginner. I don't really understand, but I think these two, they don't like indicators. So first of all, that's okay, because like the thing is, you can be profitable trading, indicators. You can be profitable trading price action. The thing is, most people who say you cannot be, you're a bad trader if you're using indicator, they have probably tried trading with indicators and failed because they simply do not understand how the indicators work.
The thing is, we cannot forget that everything we see, no matter if it's indicators, no matter if it's price action, no matter if it's support and resistance, actually it all boils down to support and resistance, supply and demand, and everything is a different expression of price. If you look at an indicator, okay, if it works for you, it has been working beautifully for me for the past 26 years, but it's okay if you cannot. If this is not your style of trading, my God, I don't take it as a personal offense, really not.
And then, please explain to me how algorithmic trading is profitable if you can't trade with indicators. And then also, you could look at candlesticks and candlestick patterns or formations as a sort of indicator as well. And we can't forget that most of the indicators are just based on price.
Exactly. It's price and volume, maybe, if you're lucky.
Yeah, it's not about the indicator. It's about the system. It's about, okay, so you basically, it's all about testing. It's all about, getting a pattern, finding some sort of price pattern, and then adding the MACD and saying, what what if I only buy if the MACD does this, and then you add another indicator like the ADX, and like the ADX is an interesting indicator. You can say that, okay, so what if I only use a trend following trend following strategy if the ADX is above 20 or above 30? Like it actually works, and then you can look at, do some back testing and see what works. And I find it ridiculous to say that trading with indicators doesn't work. The fact that someone would say that is a very good recipe for them not knowing a lot about trading. They're probably very new in the markets, and they don't like indicators because it's not working for them. But that's the thing, that there's always going to be something working for someone who's not, it's not working for the other person. It's all a Victor, I know that you're like you have so many things to say about this subject, but I know that you were just going to come on here and say hi. So you probably don't want to start.
Hi.
Hi, Victor. Comment of the day, really.
Yeah.
No, I mean, really, it's like, for me, this is also the last thing I want to say about this, because it's always a bit not good to discuss about what works and what doesn't work. We are alone in the stream. We are 4 different peoples. I know Jonathan looks at something else than me. I know Victor looks at something else than me. I know Mike probably, although it's the first time we get to know each other today, probably looks at different stuff than me. By the end of the day, we are all successful with what we're doing. And if you guys find what Victor is doing better than what I do, or it appears more to your eye or whatever, best is if you find your way, if you take like from whatever you see a best learning and maybe can incorporate that into your own trading. Let me quickly, before we go into a discussion about indicators again, talk a bit about inflation. And I want to talk about it because when I looked at this chart a while ago, I was thinking like, at just the first look, now it's me searching for my drawing tools again. Here we go. What we saw, or what we saw here. So this is the US inflation rate, which you might remember topped here at 9.2% in late, or in the third quarter of 2022 it was, then went down again. But this development kind of looks like what we saw here in the early 70s. So, and whenever I see something like this, especially on economic indicators, for me, it's not enough to just say, well, that means, we're going to see the structure here also again, which means inflation is going up to 12, or what did it top out here in the early 80s, 15%. So we have to look at what happened back then. And can we have assumptions that what happened back then is kind of going to happen again this time around, so that we see a rebound in inflation in the next years, starting probably somewhere in the next months, to maybe then above 10%, maybe even to 14 or 15%, like we saw in the late 1970s, early 1980s. And the reasons we saw, first of all, this first surge in inflation, and bear a little bit with me, I know history is a little bit boring for some people, but when you look through the macroeconomic lens at the markets and want to get a long-term picture, you kind of have to look at the past and compare if things are different this time, or if, like so often on the markets, things tend to repeat itself. So what did we have back then? In the beginning of 1970s, we had a loose monetary policy. Do we have a loose monetary policy right now? Or did we have one in the last years? I think so, no? What is a loose monetary policy? That means when the Fed is printing a lot of money. In indicator, here we are again, or an economic indicator you can look on at to determine how much money is printed is the so-called money supply M2. So this includes cash and saving account deposits, short-term deposits under 100,000 US dollars. So everything that is quite available very fast to whoever owns it right now. And we've seen, of course, especially since 2008, this supply of money going up on an average by 6.78%, I think it was, per year. newly printed money every year. So yeah, we can say we have quite a loose monetary policy. 1971, we had the end of the Bretton Woods system. You might remember back then gold was pegged to, the US dollar was pegged to gold. Richard Nixon back then got rid of this. We had an oil price shock. This is something we don't have at the moment. We had a government spending deficit. Do we have a government spending deficit? I think we have a government spending deficit in the USA that has gotten as worse as I can remember for the past, which actually since I'm alive, honestly speaking. Yeah, we have like what is that now, like 4 to 6 months that we have this government lockdown in the USA because they are simply running out of money, meaning they have to borrow more money, which usually also ends up in the Fed, of course, when printing more money. And so that is, we have a wage price spiral and a so-called cost push inflation. I mean, we had this back then in the 1970s because we had unions in the USA that got very strong, that pushed out higher wages for people, which ultimately resulted in, of course, companies needing to forward this cost of labor onto their prices, which then led to higher prices, aka high inflation. We don't have the same right now. You could, by the way, kind of explain why the Americans sometimes are so much against unionizing, against unions. It's kind of, at least for us Europeans, sometimes difficult to understand. Why don't they want to have unions in the USA? Why are they so against it? This is the root of the cause that lies really in the early 1970s, because back then it led to this high inflation and really a couple of severe recessions, especially in the early 1980s we saw that. Something we don't necessarily see at the moment. Now, the second inflation surge we saw back then here. First of all, we had a second oil shock. We don't have that way. Monetary policy failure. This is very interesting. So the person that was in charge, I don't remember his name, the chairman of the Fed back then, he was like very late in adjusting interest rates to what the inflation was. So he didn't do what the Fed has been doing in the past years. So if we maybe do a layover here of inflation rate, you can, if I zoom in here a little bit, for example, see you already got inflation rising, but the rise of interest rates, the purple one here, was always coming a little bit late. And starting in the 1980s, the Fed started to anticipate inflation rate more. Yeah, for example, you saw here interest rate peaking out well before inflation, and this has continued. This is also something we saw the Fed doing this time. So this leads me kind of to, at least at first glance, to the solution that I don't think we are going to see the second surge in inflation. However, we have tariffs coming in, and we've seen already a number of factors in the USA. Maybe you've seen this video about people in supermarkets fighting for eggs in the USA, and then like a box of 10 eggs costs like $8 or $10. So we are seeing already the price for groceries, for everyday items, going massively up. And this is going to get, first of all, worse because of the Fed. Because of the tariffs by Donald Trump. And this is secondly also going to get worse because of the mass deportations we are now starting to see in the USA, because it leads to a situation where you just don't have, if you're a farmer, you don't have workers anymore to bring your crops in. If you run a supermarket, you don't have workers anymore to be cashiers or to stock up the shelves. This is a real problem. And I think this is now the conclusion of my monologue here. Sorry for boring you here with monetary history. And is that we could in 2026 see inflation going up, at least from this portion of cost of living, be it rent, be it food prices. It's only a portion, of course, of how the inflation rate is calculated, but it's a large portion. So we should not underestimate this, and this could lead then to the Fed being very reluctant for longer than we would hope to lower the interest rates back to what they were, so around 0%, 0.25% or something like this. So you gotta be careful there, and I think if we see the effects we are going to start seeing these effects manifest on the financial markets probably late third quarter, early fourth quarter of 2025. So at the exact moment also where we could see this natural cycle peak of Bitcoin coming in. It's like all aligning again. Then we have this general US presidential election pattern, which I talked about, that under almost every president, we see 1 year of well-performing stock markets, and then the second year gets kind of difficult with corrections. And so it's all boiling down really to somewhere Q3, Q4 of 2024. So a question just now about gold there. Thank you. I wanted to show you something about gold too. Second week in a row I'm talking about gold, by the way. You gotta mark that down.
Yeah, it's. I mean, we had this exact discussion last week.
Exactly. Yeah.
Yeah, and I remember saying, like, again. I'm gonna say the same thing. I should have just bought gold. I should have just bought gold and just hold it. Like, why is it just going and going and going? Like, there's no stopping this.
It's just going up. It's, in my opinion, it's really because
by the way, just
stronger and
just to mention the comment that I have here at the bottom. So I'm gonna let you guys decide on what pair I'm gonna be trading live here today in about an hour. So we're gonna be selecting gold or EURUSD. So I have a poll in YouTube. Select that one. So we're gonna be select a pair, and then you're gonna be choosing also what time frame I'm gonna be trading on. So we're gonna have a little live trading action here going on shortly. So make sure that you go to the poll in the YouTube chat.
One thing about gold, in my opinion,
I'm going to interrupt you guys a little bit. I didn't say much so far. I want to say hello, everyone. I have been,
hi, Victor.
Hello.
Hi there. I'm here. I just wanted to pop in and say hi. I'm gonna be back in about half an hour or so, and I'm dying to be perhaps have a discussion about the indicators, or I don't know. I'm not a monetary history guy, but I'm very, very interested, Dirk. So maybe we can scratch that idea, that topic as well. Not scratch in the sense of discarding it, but scratching the surface to to uncover something that it contains. So
my pleasure.
We will. I'll be back in.
You know what? I already have a lot of questions for you again regarding quasis and price actions and bullish patterns and outside bars and all the beautiful Victor stuff.
Oh, looks like we have a very exciting discussion coming up on quasi.
Yes, I got excited already. All right, I'll be right back with you guys.
See you soon.
Yeah,
quick note on gold, and in like gold reminds me actually a lot of Bitcoin also. And again here, bull market support bands, and I'm not trading it, guys. I'm not going to start trading gold now. I know it's probably there's a high chance it would become a disaster. I don't have a good track record at all in trading gold. But one thing I noticed also, and that's the same with Bitcoin. Whenever we deviate in this bull market, quite by far margin from this bull market support bands, we see either a sideways correction or correction down to the bull market support bands. We saw here the highest here at around 12.5%. Last time we saw the correction was 8.9%. At the moment, we are 7.5% away from to the upside from the bull market support bands. So this alone would make me, honestly speaking, very reluctant in buying gold at the moment. But that's just me saying it, and you better don't listen to me, because really I'm not at all a good gold trader. This comes from the guy who told you to sell gold at 2,000.
Yeah, and I mean, I'm looking at gold every day, and I'm like, yeah, I'm not going to be buying. I'm not going to buy. Like, this is not a good place to buy. And then it goes into all-time high. And I think there's
that's maybe the thing, a lot of beginners experience with Bitcoin or crypto in general. You kind of see the price. Oh, it's like at 75 now. It's at 90. It's at 100,000. I'm not going to buy now anymore. And then you kind of neglect that once the trend has established itself, it's hard to break the trend. So probably my trading, if I would touch this, would really here be still like, okay, I'm going to wait for the setback until at least the blue line, better the bull market support bands. and then I'm going to take a long position. Makes life much easier. On the chance, of course, that I miss out on a large portion. But then again, as a trader, no matter if you are like a contrarian trader or if you're a trend following trader, if you can catch a part of the move, that's good already. Don't expect to catch the full move.
I've seen a lot of people. Excuse me. I've seen a lot of people that a lot of good traders, both from technical traders and fundamental traders that I really do respect, and I do base a lot of my swing trading on a lot of their ideas, and I think they're have very good ideas, and I see that in my majority of the experienced traders are now looking to short gold, which is. And I know one of them had quite a big short position on gold that is now stopped out. So it's like it just doesn't make sense. And I feel like this is a situation where the saying where you say the market can stay irrational longer than you can stay solvent is very true in this case. Very true in this case. You do not want to stand in front of a moving train, And right now, gold is that train. I feel like
kind of interesting that the majority wants you to trade gold today.
we do have a lot of gold traders at the 5ers, and we have a lot of profitable gold traders as well, which is surprising because I do think that gold is one of the most difficult pairs to trade in Forex. Now, if you're gonna call that a Forex pair, but it's a commodity. But I kind of. But still, we have a lot of profitable people taking out a lot of money trading gold, and I'm not one of them. If I'm going to be honest, gold is not my strong side. But yeah, Ahmed is one of them, I believe. Harash is you're probably trading gold. Are you trading gold? Yeah, Ahmed loves gold. I love gold, but I don't like trading gold, and I think I'd prefer silver. But like the older I get, the more I like gold.
But silver is even more kind of weird in its behavioral pattern, in my opinion. Like at least I don't look much at silver, honestly speaking. I have it on here, but you see, like, I don't know, just by the looks of it, silver always looks like the ugly little daughter of gold.
Yeah.
It's as I said, it's just like my experience. If you want to know, the worst for me is here. This one, oil. Doesn't matter if Brent oil or like WTI oil. I hate trading oil, and I think probably this is like for me, like where my negative thinking about trading oil has kind of become a self-fulfilling prophecy. That I have a feeling, every time I try to touch oil, I end up losing money, so I don't touch it naturally anymore.
Well, and then if you enter a position, you're going to be like, it's going to be in the back of your head that you have a low win rate and you're probably going to get stopped out. So you might make some mistakes with managing. But I actually quite like gold when it gives you a clean technical signal. But recently, oil has not done that. It's a bit complicated. Okay, so Vinicius says, I trade only Euro USD. I've never traded gold before. Let's see if Jonathan can change my mind. Yeah, I'm not going to change your mind on that. I'm probably going to reinforce your idea of trading Euro USD. So let's see, what do we have now? 56% is voting for me to trade gold. Yeah, I'm gonna see if we can perhaps.
How long is the vote open anyway?
Probably a couple of minutes left. So
you know what? I'm going to jump into the challenge. I'm going to trade gold too then.
Ooh, nice. Wow, we got a show for you here. Two professional traders, full-time traders that are not trading gold. We're apparently going to start trading gold today, which is not a good idea. We obviously have to be quite careful with what we're doing here. I'm looking at gold right now, and I feel like, that's the problem. I don't feel much. It's in a range. I mean, I can pull up my screen here quickly. See
exactly.
As you can see here, I have no position open at this point. As you can see, wow, that doesn't look good. Okay, let me see if I can make everything a bit taller here so you see the screen better. Okay, so what I'm looking at here is obviously we have on the 4 hour. So we're obviously hitting. I'm gonna try not to put too many drawings on here because it's MetaTrader, and I don't really like MetaTrader from an analysis point of view. Usually just use it for execution. But as I'm going to be trading live here, I might just do it within MetaTrader. Okay, so what we have is resistance. We can all agree that gold has hit this resistance area multiple times. But one thing that is telling me that there's a change in behavior is the first time we hit this area, we had a fake out, a big wick, a lot of selling pressure coming in, a big move, more selling pressure coming in, and a big move. Strong reaction. I do see that we have been trading above this level. Like it does look stronger here than it did here. And we are the range that we are forming now is definitely above the previous tests of this resistance. And you can also look at the local trend right here. It's quite a good looking trend. We have a level here that we have hit twice. So I would say that I'm probably going to be looking for longs, even though I would not, if I'm going to, it's a bit of an entertainment here as well. Okay. So if I had to trade my very best, I would leave this because there's no obvious trade here for me, at least not on the 4 hour. Going into this is silver. I'm looking at silver. Oh wow, this is how used I am to gold. Wow, that is great. Okay, so now looking at the 4 hour. Wow, this looks different. Holy crap. Wow. Okay. Now in the 1 hour, well, okay, 15 minutes. Yeah, I mean, the 1 minute. Yeah, okay. So yeah, I'm just gonna buy. Yeah, I'm just gonna buy. Like, there's no point in me not buying here. Okay, is this a stop loss? Yeah, I'm just gonna put it down here, and I'm gonna open up a position. I'm gonna open up 0.25%. So I'm risking 374 on this one. Stop loss, no TP. I'm just going to trail this one. Yeah, okay, I'm buying here. That's a good breakout right there. Okay, I need to have algo. Oh my God, it's breaking out. Okay, there we go. Yeah, obviously got a bad fill on that one because of the slippage when you have this volatility.
Oh, that's quite a position size also. Oh, you have your stop at 902 already. Okay.
Oh yeah, it's a very tight stop. So I'm risking between 300 and 400 on this. So if we were to look at the 5 minute, this is a rather small position in terms of the stop loss. But yeah, let's see if 5 minute is going to close in 2 minutes, I believe. That's good. We got the 1 minute. So what I'm thinking here is, we got that move up, and now I'm kind of looking to see a move back down into, wow, MetaTrader is not a move back down here. And if we have a bullish reaction to this area, which we've already had a reaction here, and I don't think we can go lower than the 1 minute. I would like to have seen what this looks like on the time frames lower than the 1 minute. But it does look like we have reclaimed this low time frame resistance as support. If we can have further bullish reactions inside this level, I will perhaps add a little bit to the position and then start moving my stop loss up a little bit up into this region. So let's see what we have. Obviously, I'm currently down on this one because I got filled up like right above that wick, which is, when you have a move like that, you obviously saw a lot of volatility come in, and when you have that increase in volatility, I do believe that the spread might widen a little bit. But in terms of
yeah, I think you bought on the large green candle just now. No, I think you got a bad spread there at that precise moment. Yeah.
Yeah, and I remember saying like, okay, I'm gonna buy here, and exactly when I pressed, I didn't have algo trading on, so it continued higher, and then when I got into the position, it already moving quite aggressively. Guys, I want you to tell me in the comment if you're trading gold, and if you if you're trading gold, would you take this setup, or what setup would you take? What are you looking for in terms of getting into this gold move? What I'm doing now, obviously, is trading the momentum. I mean, this is the 5 minute, and if you look at the 5 minute move right here, it's obviously we're going to see a retrace at some point. But you also see, for example, this level. You know, what I'm trading right now might as well be this entry right here. And then you can see on the 5 minute, you have very good invalidation levels at every swing low. And to be fair, I should have probably put the stop loss a little bit lower, but it's still. And one of the reasons why I'm not trading gold is because a lot of times I see this, like prices comes down here, and then it starts moving higher. Like it takes out that level and the level below and the level below. Like it just goes straight down, takes out a lot of stop losses, and then it keeps moving. So if I were to build a strategy around gold, I would probably try to build a strategy where I enter once that happens, when I see that there's, I guess you could call them liquidity grabs or just price action coming down, taking out a lot of orders, and then for buy orders to come in.
That's the thing about gold, no? And in a way, it's a bit like crypto there also, that you get invalidation levels that like in the hindsight, of course, they always make sense. You can clearly say, okay, this is what happened there. But at that precise moment is nothing you expect. You just, especially if look at the chart here of gold. It's almost, it's a line up, and then you suddenly get that spike to the downside. But you can also see now here, just now, like how the momentum reacts immediately to the upside again.
Yeah.
Have you been stopped out? No?
No, I'm still in the
Okay,
I got stop loss down here.
Good. It's sometimes crazy. As I said, for crypto, I don't mind it because I expect it there, because it's always like this. The volatility you have in crypto, like days where you swing 5%, 8% to the upside just to fall by 10% or 15%, are quite normal. But in more legacy assets, especially Forex pairs or something like gold, it's something I don't expect because I'm not used to it, honestly speaking. When I started my career, you didn't have these swings. Gold was quite a boring asset back then, especially Forex was also quite boring. Like also the moves we see there, like gap opening, like we saw last week of 100 pips from Friday to Monday to the downside, just because the president said something about tariffs. This is something you didn't see very often, and now it's getting more and more common. Maybe it's the downside, of the world becoming more interconnected. Also, you have more algos doing that.
I can't believe I'm actually going long here and looking at the 4 hour. This is a trade that I would never take, because I would look at, but that's I think that's where my weakness comes in as a gold trader, is I'm looking at this and I'm thinking, well, I need to wait for this level to get retested. But looking at gold, it might just fly higher. It does react to levels very nicely, but breakouts like this also seems to almost react a little bit like Bitcoin. You have on Bitcoin, you have a break above a certain level and it just continues. It just, there's no stopping. I'm currently in profit on my second position here. So what I'm going to do here is I will most likely as soon as we have a break above this level, I might close that second position and move the stops up. Why?
I mean,
Why
if
take
you if you look at the chart here, and even if you zoom out a little bit further, it's almost like it didn't really matter when you buy, and that's the beauty, if you follow the trend. Often it doesn't really matter where you buy. You just need to be careful with your position size. Maybe need to be careful to anticipate what happens if the wick down is like more than I anticipated. And it took me quite a while to get used to that when trading crypto, especially on the shorter time frames. So I would expect the same learning curve on something like gold or silver or oil as well, if I really would commit myself to it. I can guarantee you probably the first week would either end like, with a black or zero, black or red zero, or a little bit in loss until I kind of get the hang of a market. But I can understand that trading gold is attractive to a lot of people. And if you're into commodities, it's probably, especially into day trading commodities, probably the asset you need to concentrate on. It's much more liquid than trying to trade something like copper or I don't know, or other commodities like orange juice or cattle or soybeans.
So this is a good question here. Why do you take a trade that you normally? Why take a trade you never take normally? Surely that embeds bad habits. Well, not really, because if you look at price action, when I say this is a trade that I normally wouldn't take, it's because I'm mostly trading the higher time frames, and I never really go lower than the 4 hour. But if I'm going to be trading here on the lower time frames, I'm basically trading almost the exact same way as I would be trading a swing trade, and that is, look for a break and retest whenever price comes down and hits a support level and I have a bullish reaction. I want to get in on that trade. But this, the first trade was definitely a breakout trade, and then this one was a reaction to that level. So it's similar to a trade that I would take as a swing trader as well. So what's going to happen here is I'm most likely going to get stopped out here, and I do actually expect price to go down and probably like test these low areas, and that's exactly what I showed before. And then, take out a lot of stop losses and start moving higher. So that could be a reason to get in on another trade. But looking at the 4 hour, I would definitely be interested to see what happens within this one right here. I think that a reaction within this level would definitely. Okay, I just got stopped out here. So let's look at the 1 minute. So now we see price again coming down to this level. This is a good support, and I believe a lot of people that bought this breakout, just like I did, probably has their stop loss around this area. So if we can get a bullish reaction within this area, I would be happy to get into another trade. And if I get stopped out on that one, we could say that the low time frame trend is most likely invalidated, and at that point we might come down to that 4 hour level. I should probably open up a challenge account because I have a sense I'm going to be losing a lot of money here. So it's probably better lose money on a challenge than this. So let's see.
I did it also as I'm going to do it as a paper trade, by the way.
Yeah,
because
that makes sense.
I'm not risking my real money. I'm going to take my 200K account or whatever here to do shenanigans on gold, which I normally don't trade. So I'm a little bit with who was it, like NWJ just wrote, commented.
Yeah. And there, don't be sorry. This is, every time I enter a trade, I know exactly what I'm risking. And, if you can't take that risk, then you shouldn't enter the trade. So whenever I'm going to enter a trade, I always say, okay, I'm risking I'm risking this amount, and that's the amount I'm going to lose. And if you're not okay with risking that amount of money and losing that amount, then of course you're not gonna enter the trade. So we're now currently in that support area, and as you can see, we're getting a bullish reaction. This is the level that I want to get in on. So if this candle closes bullishly, I'm getting in. Otherwise, we'll be waiting for a move lower. Let's see. Okay, that's the one. So I'm in here. Let's see if I get stopped out on this one. Then this will be that will be my signal to.
My stop is at 2899, by the way. I'm also long now.
2899. I'm at 290. Oh wow. Okay. Yeah, that is exactly the reaction that we do not want. Let's see if we can pull our TP. What would that TP be? Okay, that would. Nah, we want a higher TP. We want to make sure that we can trail this. So now, well, there is. Okay, so I would say that this is the last support area. That would be the last support area. I got my stop loss right on it, but if you look at the behavior of this uptrend, yeah, that would be the support area that holds. So if this excuse me, if this level holds and you're really going to get a move to the upside, then I think I'll easily make back what I've lost here if this trend is going to continue.
It should now. We are now at the 50 exponential moving average on the 2-minute chart.
2 minute? Who looks at the 2 minute?
Me. When I trade lower time frame, I always look at 2-minute charts.
Interesting. You know, I've started looking at the 3-day when I'm swing trading. Yeah. I think the 3-day.
And you probably do it for the same reasons, like I do it, because it's at least for me nowadays, when you trade lower time frames, I think the alpha lies in looking not at what everybody else is looking at. Like everybody who starts trading looks at the 5-minute, maybe at the 1-minute chart, 50-minute chart. So I started very often looking first of all at more odd numbers. 2 minutes, 3 minutes, maybe something like 10 minutes also. Plus looking, using instead of candlesticks, not today, but usually on crypto, I use, for example, Heiken Ashi charts because I want it more smoothed out. I don't want the crazy wicks we see normally on candle charts, on candlestick charts.
Yeah, definitely. Vinicius also says 10-second helps too. Like this could be a joke, but it actually makes sense. So a lot, I see when sometimes I'm looking at the 10 in trading view, you can look at the 1-second chart or the 10-second chart, or like the second chart. And sometimes I have a lot of new traders coming in here. Then they see that I'm trading the second chart and they're like, oh, that makes no sense. But looking at the 1 second, like, okay, you probably have to look at the 10-second because the 1 second is just gaps all over the place. But looking at the 10-second, what you actually see is what's inside the candles. You see the momentum inside the 1-minute candle, because when you see a 1-minute candle, you only see like a green or a red candle, a bullish or a bearish candle. But what you're not seeing is what happens inside that candles, because that can tell you quite a lot about the behavior.
This is such an interesting comment from you, because it's exactly what I asked Victor last week. When was it? I think on Wednesday when we did the second live stream, and I asked him a little bit about more details, like of his techniques, and he kind of explained, I'm looking like, for example, on the daily 4-hour chart for structures, and he wants to see then the same structure on the lower time frame or another structure that points into the same direction. So going for the timing to the lower time frame to trade into the direction of a higher time frame. Very interesting.
Buy at 2,900. That's my stop loss, by the way.
You want? Can you switch to my chart very quickly?
Yeah, sure.
So just to give you guys the overview what I did here. So I have 2 buying orders executed. Actually, one I accidentally got out, but as I said, I'm trying this on a paper trade, looking at the 2-minute chart here. In this case, candlesticks and not Heiken Ashi charts. But what we very often see once we have an established trend is that when price comes back, that it either will reflect here on the 21 exponential moving average. So you saw that a couple of times, or it goes down to the red line, which is the 50 exponential moving average. So 50 times 2 minutes. So this is why I prematurely entered here. So I should have waited here a little bit, but I was impatient, kind of afraid to miss the up move again. And the second one, I entered just here when price started touching the 50 exponential moving average. So I added to my position in the anticipation that we see now price being reflected and moving maybe to the area of 2908, 2910, something like this. And this is like a thing I like to do in general, that I kind of scale myself into a trade. Now we are breaking under it. So we have to see. Eventually, of course, we need to get out of this trade. But at the moment, I'm going to wait still to see if it really is a break of structure, or maybe we're just seeing something like we saw, for example, here, a flattening in the trend, and then some kind of price action that points us to the upside again. But judging my luck with trading gold dollar, this was probably the top of the day, and now we are moving down to 875 or something like this. See another reason why I used the demo.
Oh, hello, Victor. Hello, Victor. So we how are you trading gold? Because it's please tell us how.
We are failing at trading gold once again.
But you're asking me now, if I'm trading gold?
Yeah, I'm asking you.
You're asking the euro dollar trade out to trade gold.
No, I don't have a position on in gold right now, but it's it reached the macro target. We indicated a couple of I think it was a couple of days ago. I think maybe like 2 weeks ago, not a couple of days, but some time ago. I can talk about it later on for those when we discuss the gold chart. But how is everyone doing? It's the 10th of February, fresh week. How have you guys been doing? I know I haven't started a conversation on my side. Although I enjoyed the conversation you guys were having for those parts that I did follow.
I have to enter a new position on gold. I feel like this bounce here is just
do it.
I mean,
do it.
Yeah,
really.
this here I got stopped at again, but I mean that candle, if it closes bullishly,
I actually removed my stop loss because I said, okay, I'm going to add to the position there for now.
Yeah, I'm getting in here. That I need to. So okay, so
we
that actually, who was it? This guy says buy now, and that was exactly where he said buy at 2,900. Yeah, that's 2,899. So who are you?
Sahu, now you're the GOAT for today when it comes to gold trading.
Yeah, if this one's like the winner, then you got to come on here and you're going to trade against. Okay, let's say this: if any one of you wants to bet against me here on gold, you're free to come on the live stream, show your face, trade live against me. I will get you a demo account because I will set up a demo account for you. I'll trade on a demo account. If you make more money than me on gold on the span of 1 or 2 hours, I will give you an account. I will give you an evaluation account if you do that. Holy shit! Look at this. Look at that move down.
Oh. Gold is currently one of the first things that I do before I choose my direction is what has it done so far in this day. And when I look at gold, gold has done I'm not showing it on my chart, but gold has done $51, around $51. Let me see, $51.48, where the average is $37.24. Actually, the average, depending on what value you use, but it's clearly overextended. So, do I want to be? I beg your pardon?
No doubt about that. Yeah, it's exactly what I said earlier as well. That we have deviated from the average true range, or I measure it with moving averages by too much already.
Yeah. So
now it kind of like the thing with gold is like it looks like it now, from a strictly technical point of view, like now I'm starting to think maybe we're putting in a top here, but yeah, I don't know. I feel like when I start thinking about a top on gold, it just breaks into new all-time highs.
Yeah, gold is very I don't know how to call it, volatile, of course, wild, feisty. I don't know how to call it, but it's
Feisty is
indeed.
good. Let's
Such a great word, feisty.
Feisty.
But
Yeah.
definitely gold is something difficult to be tamed, right? To be traded and still think you're not gonna get burned from time to time. I'm gonna share my chart, and let me see if I can have it yet. And we can see already on the daily, just looking at the daily chart without even checking ATRs, anything, we can see that the bar is quite big. I mean, just plain observation, even compares just by the looks of the body. But I mean, if the range already, it tells you that we are. It's early. We haven't started. The sessions are just beginning. London is open, but we haven't done much yet. So just by the looks of it already, it tells us how much more can we go. I ask myself, and if I double click my chart, I will see that the ATR below us, and we can measure. Currently, the ATR, depending on what value we use, is $39.97. Right? It doesn't really matter what value you exactly use. The point is that is roughly the average of the last couple of whatever value that you use in the ATR. And if we measure that, so roughly 840. So if it does 40 today, that's average, right? And maybe today, maybe there is a reason for it to do more than 40. That's fine. And let's go check what it's done so far. And if I measure that, I measure 50.51. So I already know it is 125% its normal range. Can it go higher? Yes. But the more it gets stretched, the more unlikely it is to keep on going, right? Because price needs to breathe, price needs to come back, retrace healthily. And so I do I really want to be going, of course I can find a long from this position. I don't want to say, all long from these positions are wrong, but in terms of ranges, you have to think about probabilities. Is how much more can it go up, and should we perhaps be looking for a counter move, a retracement, a fade move? And so that's my first impression without really doing
Can I
anything here.
just quick? Can you switch back to the chart you had just now? If I have
Sure.
to play the devil's advocate here, and I think I disagree with you on this one, because if you see
Okay.
what happened, like in the weeks before that, even if we had, this is not the first super large green candle we see there, right? And
Mhm.
we still had like following days. The last time this happens, like what was that? 1, 2, 3, 4, 5, 6, 7, like the large green candle after that one, actually, yeah. And so
This
when
one?
it broke out of, yeah, this one exactly. See, the days after this, we still trended higher. I'm like totally agree with you. If we look at like an intraday setup, at a certain point, of course, you might think like, well, we have stretched our normal distribution on our Gaussian bell curve so far to the right already that it doesn't make sense anymore from a risk reward ratio. But I think if you have like a longer time horizon, if you say like, I'm going to hold on to this not just for the next 30 minutes, I plan on holding on to this maybe even if the price goes against me first. Of course, if I didn't overdo it with my position size, I'm willing to hold on to this for a couple of more days. I think then the reward is more on your side than the risk on this trade, because you are just going with a trend here.
I love it when we have
Sorry.
these kind of discussions. I totally agree with you. Actually, the ATR, the way the stretching, the overextended, only applies for the period that I use it.
Yeah.
So in this case, the ATR is a D1 ATR. So the stretching gets reset every day. So that means everything that I just said only applies to today.
Mm.
As long as the soon the day ends, that probability doesn't apply anymore for the second day.
That's
Because
why I made the comments that you are probably, analyzing the structure of the day, not like how is it going to be continue the next days. Because I know you are usually on the longer time frame and don't necessarily like to have a risk overnight, right?
I try not to have it, but I sometimes I there's no way to avoid it. You have to be in the market if you're swinging overnight. So you have to be overnight and over the weekend, even though I try to see is it still worth it. But that is totally correct, and I think it's a great point, Dirk, that to the remark you made, because what I just said, I wasn't mentioning it, but it only applies for intraday, right? So only intraday trades. If you're a swing trader, what I just said is irrelevant, because today may stretch or not stretch. It's not about today. It's about where's it going to be in a couple of days,
Yeah.
at least maybe in a week. So today's stretch is irrelevant in the bigger picture.
Yeah, that's a nice way to put it, really. Thanks.
So I'm long again on gold. Surprise, surprise. But I'm up. I'm up 500. So I got about $1,000 left till break even. But the thing is, if we break above this level, then I like this. I like it because if you look at this trend shift, I want to get above that trend line, get above this resistance area right there. I'm targeting the highs here, and targeting that high, and then I will probably be done for gold for the day. As you can see here, very wide stop loss this time, because if price fails to reclaim here, moves down, break this low, I will manually close the trade for a much smaller loss than what I've planned. But this is a big position. I'm risking quite a lot, but no one remembers a coward. That's the thing. No one remembers a coward. You gotta risk it. And also, no one remembers someone who loses their whole account. So that's kind of like the flip side of that.
Jonathan Rendin, the chat of trading.
Yeah, let's go. Or guy who lost it all trying to make everything.
Guys, right. I mean, and all seriousness, of course, we're doing this with a little bit of fun here. It's like, and of course, when you're doing a live stream like this, you because we want to show you some stuff, obviously, too. It's otherwise it kind of gets boring for you. So we might take risk normally that we wouldn't risk. I offset this because, like I said to you, this is gold. I don't usually trade this. So I'm doing this on a paper trade. Doesn't hurt me, It's not the same like doing it live, obviously, when risking real money like Jonathan is doing it right now. But this still,
looks good. I think I like this. I think if we get a bounce within this area, I think I have a good entry, and looks good. The only thing that kind of goes against this gold trade is obviously the any time frame higher than the 5 minute, which is obviously very it's just not really a good way of doing it. You shouldn't really do like bottom top analysis. You should definitely do like top to bottom analysis, and not the other way around. What I'm doing is like, okay, look at the 1 minute, look at the 5 minute, and I'm like, okay, that looks good. But then the 15 minute, the 1 hour, the 4 hour, the daily, the weekly, the monthly, and the yearly looks like shit. Then maybe it's not a trade. But but again, I mean, what it all comes down to is like, what have you tested? What are the results telling you? And I bet if you look at gold and you look at when there is strong momentum, like after a strong daily breakout, for example, when gold has momentum, trading the lower time frame trend would probably be a good idea, I think. So, because an asset that really has that strong momentum, you want to look at that momentum, and then you want to kind of zoom into the lower time frames. And look what's happening here. You actually have it move up. You're gaining a low time frame support right here. The only thing that I'm a little bit worried about is now we're kind of seeing this type of price action, but from from the downside. So we really need to, in the next couple of candles, we need to break above this this high. So we need to get above that 2,900 902 ish area for this to be valid. Brennan, if you're serious about getting on here and trading against me, then by all means send an email to tradingroom@the5ers.com, and I will set up demo accounts for both you and me, and we'll trade gold, and the winner will get a an evaluation account. That goes for everyone watching this. I'm definitely happy to give away an evaluation account for anyone that comes on here, and because it's not easy trading live in front of an audience. It's not easy, and if you're able to do that, you're definitely going to get some reward for doing that.
I got one. Got to play. I know it's gonna make it a little bit more uncomfortable for you, Jonathan. However,
yeah, I'm gonna take a break anyway, so I'll see you in a bit. Right. See you in 2 minutes.
There is.
I will have to watch the replay.
All right. If I look at the ranges, right? I only look at the one bar for the indication of, can this go much higher or not today, by the way. But there is another thing. If we look at the last, I mean, this is not even, I didn't gather data on it. This is just visually. Let's try out and indicate or point out the biggest bullish bar that we have seen in gold in the in this chart, which goes all the way to September. Pick the biggest ones that we can see, and let's measure them. Right? This is just it's not very scientifically or well done, documented. Data gathering, but it's a low sample size, but it gives you a little idea what has been normal for price for the last couple of weeks when it goes bullish. And we have here, this is before the retracement, and this is we got a retracement, and this is after. So you got different market condition, so that may represent a couple of more bars. So if we just look at those, and I think we have a couple of. All right, so let's measure them. We have, how many do we have? We have 7. So let's measure them. This one is $49.17. I'm not even writing them down. This is 41. This is a big one. This goes all the way to 48.50. Right, that's the big one. 47. 12, 38, 42.95, 42.66, and today, what are we doing again? 50.51. Just not only on today's candle on the ATR, but visually measuring, bullish bars. How often has it exceeded and reach 50? Not one, just today. Maybe today is different. Maybe today we have more volatility. Trump is here. We have tariffs coming out. Volatility. Yeah, that's there. Surely there is a reason for it. But what I'm trying to say that is we better have a huge catalyst if we think it is a high probability thing that is going to today keep on going higher, because the odds are not in our favor unless we have some huge event happening, and I'm not sure that event is happening right now. So I would guess that what we have seen today, maybe, and it doesn't mean that Jonathan is going to get stopped out, not at all. This is just about the range and how the probabilities are, and it's quite likely it can go and tap those highs, even put a higher high. That's fine, but it's unlikely given that limited task we just did.
That's a good point. but for me still, I know you're probably thinking the same, but just to clarify, for me, it still wouldn't mean like that I would look for short entries on gold at the moment.
No, at all.
Because
That's
if
correct.
we see the momentum, it's really, like very quickly to the upside.
Yes.
Of course, like I totally agree with you. Going long here when we've extended that average range, of course, it's not scientifically, no, but it's an indication. It's an indication that normally we don't see larger moves than like maybe it was on average something like $41, $42, maybe $43, more like $42, I think. Of course, it would, be a little bit trying to stretch the rubber band too much, at least for the day. And so I agree with you there on that one. That's why I also said, this for me is a demo trade. This is an entertaining trade, of course, and likelihood is there to be stopped out again. And also, it's I think it's unlikely that we see like 2 days or 3 days in a row of that, $41 or $42 to the upside. Normally, you will see not necessarily like a consolidation day where you see a red candle, but normally you will see that the next candle, that the next day is going to have a lower range.
Yeah, yeah, you're totally right. I'm not saying a short from here at all because the momentum is to the upside. There is no break of structure. It's strong. It can continue to go, right? It can continue to go. It can certainly can. And I actually think that the next couple of days it's likely to keep on going because of the momentum is on our side for it to continue to go higher. So yeah, it only applies for today. So but I think that's something to, and for me to go short, it needs to create those reversal patterns on, let's say, the H4. Yeah, put in a bearish engulfing outside bars, quasi on the lower time frame, maybe on the H1. And if we check gold for those things, they're not present at all. Look at those last 3 H4 order blocks. I mean, candles. What did they tell us? Who is in control? Completely the bulls. Nothing to nothing, no dirt in. There's a saying in certain languages. There's not a dirt in the air, right? The sky is crystal clear. And everything is looking very optimistic for the bulls. So I would assume that and as long as that is the case, we should just continue with that, right? Trend following is actually very, very, very powerful and should not be underestimated. It has a lot of edge.
That's the thing about trend following, though. No, it's very powerful. It's like, in my opinion, if you're a beginner trader, the strategy you should be following. But it's the strategy that goes against our human nature. Because we are thinking more of contrarians. We tend to look for a break in structure. Why is that? It's my own explanation. So please, we gotta ask somebody with a psychology background on that. For me, it probably stems still from the time from very deep, primarily rooted areas in our brain, where we were living somewhere where our life and death depended on seeing the break-in structures. When you look at a forest or something, seeing like, this looks different, there's a predator lurking right now. I think this is why we're so, or maybe a reason, as I say, from my very naive understanding of psychology, why we tend to feel more comfortable in being contrarian traders. Although for the beginner traders, it's the much, much more difficult trading strategy.
Yeah, actually, I like that explanation, that pattern recognition, that thing, to pick up the difference.
I think we should ask what's her name, Anastasia? No,
Diana.
we have
Dr.
Diana.
Yes.
Yeah, I haven't met her yet. We should ask her about it. If maybe she knows if there's like a scientific explanation to this, or this is just something that I came up with.
It sounds very plausible, and I'm sure we should ask her for explanation. I'm sure she can illuminate our us on that subject.
Mm.
I was gonna say that I mentioned this earlier, right? I have a macro target that was reached today, and some people might ask, well, how did I come about having that target? What is it based? Well, it's kind of very, very simple. It's so simple, but still, it's quite powerful. What I do is I look at the higher time frame. The macro, this in this case, is based on the weekly, and if I look at the at the weekly time frame, some time ago I said a couple of days, but I think it was longer than a couple of days. Some time ago, I think perhaps it was in December, I looked at gold, and it may be around mid-December, I think it was. It doesn't matter the timing, but as soon as we have a bullish order block being retested, you can test this. Everyone can test this. When a bullish order block is being created, or a order block, doesn't matter bullish or bearish, when it is successfully retested, it typically has a very easy time reaching twice the ATR for that time frame, right? That's very, very has a very high likelihood of reaching 2 times, one even higher, but 2 times, or you can choose any multiple of the ATR. Doesn't really matter, but you can get stats on this, and that's exactly what I did. Right, there was an order block that was created. That one was created, right? This bigger order block created. This was all the way in November. You could have traded this on the 25th of November, or actually use this idea to build your case, to frame your setup. And what did price do? Price retested in the following days and started creating bullish order blocks again, right? And it retested on the third candle here. This was a second. I think we discussed this when it already created, or was about to create, this order block, because I remember the setup. And once I had this, I used the probabilities that I know of from the bigger order block that we know of, right? The bigger one we were retesting. Of course, it retested a smaller one as well. Let me indicate that this smaller one, right, which you could have used as a refinement entry, or a refinement to the entry. And what I did was measure one of those bars that created the order block. It had $102, the average. That's the weekly average, right? And I multiplied it by whatever. You can use this. There's nothing magic about 2. It can be 1.5, it can be 2.5, whatever it is that you have measured, and you have gotten a very high percentage in your measurements. And I just use 2 because it's easy, it's simple, but not necessarily optimal. And you add twice that ATR value onto the lowest high of those 2 candles, right? And that would be 204, right? We measure 102, 204, and that's going to be 2,889 or 90, whatever it is, and that's the macro target. Very simple.
So that's awesome, man. Really. When did you do that analysis? Come again?
I actually did it live. I need to check it up, and
Wow.
because I actually put that macro line
Nice.
online live with everyone. I think it was in December, I would guess. But
Awesome.
I'll have to check. I didn't take a note of it, but it could be. I need to find out, and perhaps replay it or something. I don't know.
Target reached.
But
Awesome. I mean, that's really, really good stuff. I always like that, when you can refer to, hey, this is what I said back then. Yeah, what can I say? Macro target reach. So is that like a reason for you now to do another projection, or would you wait like for
no, that's
those
it. It's
big
over.
order blocks again?
Yes, no, it's over. It did
Yeah,
its job. My stats don't say anything else. But I mean, you could use those stats to do other projections. What are the probabilities of it hitting 3 times the ATR, 2.5? But I don't go into that because you can lose yourself in the details. You gotta, you gotta pick something simple, have it simple, and something that's easy to use, and you help it. In this case, it helps me if I'm in a swing trade. This is one possible target that I would have.
Yeah, it's also
Right?
good, to have that upfront, a target like this, because otherwise there's always the danger of getting lost in the candles. You kind of get so lost when in the daily action of a chart. You guys know that maybe, that you look at the long-term chart, let's say a 4-hour chart or daily chart, you have like a very clear picture of what is happening, and then you go down the time frame and then suddenly you see too much information. And you put too much value, for example, on this large 1-minute candle, although in the grand scheme of things, it's just a very small price fluctuation. This is, in my opinion, really the danger when people look too much on the lower time frame charts. And for me personally, also the reason why I'm like with 95% of my portfolio in long-term positions and only play, so to say, I don't like the wording, of course, play, there's cause and action and rational in my scalping and day trading, of course, as well. But I never would like fully concentrate on this like you are doing. This is why I find it always so fascinating talking to you, because you see those things on the lower time frame that never would occur to me.
Yes. So I think what you just said is very crucial, because if there's so much information constantly being bombarded at us, the chart is constantly ticking, constantly producing candles. Even if you look at my watch list, it's constantly uh, competing for my attention. The chart, the candle, the structures, but I think the art of trading is to know when to pay attention and to what, and everything else is just irrelevant. And it takes a long time before you realize what is important to you, and that's another thing. What's important to you may not be important for the second person. So it's finding your way in trading is can be taunting, but once and the best way to do it is with data. What I just did, looking at the ATR and measuring, how many times pick any structure, phenomenon, or event. It could be like a moving average crossing over, right? A crossover.
Absolutely,
It can be the previous high of the last 50 days or 50 periods being broken. It can be anything. It doesn't matter. Go and test, how far does this
sorry, but I'm up $1,100. It's about to hit that TPI. I
very
shit you not. It's
exciting.
Gonna hit that TP. I went away for 8 minutes. My son is home. He's sick and home. He really wanted me to watch this Donald Duck thing. It's like 8 minutes. I'm like, okay, I gotta and probably the best decision is just to not look at the charts.
Could have been the most expensive 8-minute cartoons you ever watched.
That's gonna be a $1,600 trade if it hits that TP. If it reverses from here, though, I will sue Disney for that amount. Oh, look at that. Look at that. Good. Hit that TP. Come on, hit that TP. Do not reverse. Do not reverse here.
But here we see the
God, look
momentum.
at that. Come on. A little bit more.
We see the momentum again once it picks up on board.
Oh, good God. Hit that TP. You got to hit that TP. Like it's so close.
We want to see a new higher high, so we see a continuation of a pattern. Don't get out of a trade yet, man.
No, you don't think so?
I don't want it. Imagine it could be 5K. by the end of today. I'm just.
It could. I'm gonna remove that TP. I'm removing the TP. Okay, TP is gone.
No.
Dirk.
I
don't know. I don't
would've
know where you
taken it
live,
out.
but I'm
I would've taken it
gonna
out.
figure out.
Lucky for me,
I
there are
would've taken
probably
it
a
out.
lot of dicks living in Berlin.
Yeah, I'm gonna move stop though. No, you know what? I'm not going to. I'm not gonna move my stop. Oh, okay, my. No, I'm not going to. I'm not gonna move my stop up. We're gonna get a bounce here. We're gonna get a bounce here, and then we're gonna move into all-time highs, and that's where I will move my stops. I'm having a lunch in a. Oh my god! What if I get stopped out here?
This is a good example right now.
I
Sorry to
think I
abuse
took
you
off-
here a little bit, Jonathan. Like the kind of emotional stress you go through as a trader. You go through more emotions within the time span of 30 seconds than other people have in a whole week.
Oh yeah, definitely. It goes from like euphoric to like. Well, the thing is, I'm not. Like, I'm not really.
I really should have made a comment about removing the take profit.
No, it's good. It's all good. But it's like, I'm not real. I feel quite calm because like I said in the beginning, I would never enter a trade. I would never. Yeah, Lawrence. What I'm gonna do? What's gonna happen is if this one hits TP, I'll be up like $200. So but now I don't have a TP, so.
Thanks to
but if it would have hit that TP, then I would have been like $200 plus in a day. But the plan here is to I want gold to get into new all-time high. If we can hit these highs, of course I can actually move my stop loss to into profit here. But I need to see some momentum of this level, like strong momentum, and I need to, because now you're looking at the price action. We have low time frame level being tested here. We have 1, 2, 3, 4 swing points here. So there's a trend. There's a trend here, and when there's a trend, I feel like I don't really want to close a position before that trend gets invalidated, especially not on a market like gold that is just constantly, moving. So even if this one hits TP, I'm not. I mean, even if it hits stop loss, I'm not really, or breaks this low, I'm not really. Honestly, like I do care, but I've already accepted the loss. Otherwise, I would never enter the trade.
Oh God!
But it's interesting scenario. Yeah, that's right. These are the types of comments that I need to keep. And he also has some masks. Check that out, Victor. That's your homie right there. That's your friend. Your brother in arms. What strategy are we using here? Yeah.
That's a good question.
Yeah, that exactly. You're exactly right. No, the strategy. Yeah, exactly. It's support and resistance. That's basically it. If you look at where I entered gold, you can see here on the 5 minute where if we just remove this, what you see is obviously you have a level. You can probably put it like this, and then you see that you come down, you hit that level, you have a big consolidation area here. Price comes down, it's a big move down, very strong bullish reaction, and that bullish reaction is what I'm buying. And now I also said before that this trend is not really invalidated. It is invalidated if price moves, in my opinion at least, if we move back down here, because now we have then I would, if price moves below this level, I would view this as a lower low. But at this point, I don't view it as lower low because it's in the same area as the previous lows. But if you have a new low here, then this becomes a lower low, and then a lower low with lower highs, and that's where the trend is invalidated, and that's where I will exit the trade. But what I'm thinking is, you can also see I really like the reaction on the 15-minute here as well. You can see how it. MetaTrader is not the best to view that, but this is a good reaction here. So we'll see. We'll see what happens. It's kind of like at a make it or break it moment right here, where we might find some type of support here. And if we find support here, that's great.
I just realized I was muted. I was trying to interrupt you guys,
Poor
say
you.
things, and I said, "Well, Jonathan is quite excited today because I didn't get a chance to say anything, but now I realized I was muted.
Yeah.
I was gonna say this about the trade. This is not an order block, just for the record, but I do see that this is a supply area, at least on the 1 minute. 1 minute isn't that strong. I mean, it can break it, it can continue to go higher. 1 minute doesn't tell me anything. But in the absence of any other sign, that's the only thing I have. And it's not even a valid order block. But I can see that, the same behavior that creates order blocks created this. It's not as strong to have created because it isn't an outside bar. It would have been an outside bar if it closed below this bar, and it didn't. So it's not an outside bar, and it's not an engulfing. So it's not an outside in order block. However, I still see it and recognize it as such, something similar of an inferior quality, but still something that could stop price or at least pause price for some time. And the reaction, the fact that we went so strong into it, makes me want that happens. I was muted, but I was saying close it. But
okay.
of course,
Well,
but
thank
of-
you.
Oh
but of
God.
course I
So it's
I-
the fault of a guy who said from the beginning, "Don't trust me when talking about gold."
Yep. Yep.
Yeah, so I was muted, and of course, with the mask on, there wasn't even a way to see that I was saying something. But the other thing that I want to see are on the next couple of structures, or I mean, sorry, time frames. Are we forming bearish or bullish structures to tell me who is in control? And on the 2 minutes, I don't see. Are we breaking? This is the last bullish structure. Are we breaking it? Well, we haven't broken it yet, but we are maybe in 30 minutes. The 3 minutes.
But like
have-
the thing is here, if we all collectively, because what this is, the markets are just, it's all human psychology. So if we collectively, it's like you're watching yourself in the mirror and you start smiling, then you can actually trick your brain that you're happy. So if we all collectively start thinking in bullish ways about gold, and perhaps also open a position, we might actually, reverse that psychology. This live stream might actually influence a couple of thousands of people, and that might actually help. I mean, we might see like the butterfly effect, like that chain reaction that kind of goes across the market here, and actually it's going to be a self-fulfilling prophecy. So I don't really like your tone when you speak about gold, Victor. I don't like I don't like the bearishness that you have. I feel like it's problematic in terms of my position size and the direction that I want the market to go. So we really
Why does
have
that
to think
sound
about
like the last review I had when I still was working for a company? I don't think I like your attitude. It doesn't fit, into the
Yeah.
overall positive direction our company is going.
Yeah, I mean, I'm the one who books in people for this show. Remember that. Nah, you can say whatever you want. I'm still gonna hit that TP. If I had one.
So the well, yes. Now I don't know what to say.
Yeah, gold is gonna hit 3,000. Thank you. This is the exact type of energy that we need. Harash knows what we're talking about. But yeah, I mean, Victor, I do appreciate your insights as well. Man,
I'm trying to.
also, I'm adding the reload zone to this move, and it's like, yeah, okay, price is reacted perfectly to that area. Now, now it looks like this is a very good looking lower high. So for people looking for, to build a short position on gold and think that this move is overextended, and of course that high that we just printed on the lower time frames, I mean, that's the entry. And I know we've talked about this before, Victor. We talk about, when we talk about mean reversion strategy, it's this it's this low time frame move that creates that first sign of a reversal. I mean, that's where you want to get in. And this is exactly a almost a picture perfect mean reversion trade. But again, it doesn't have a 100% win rate. It can still fail, and it's gonna fail today.
I'm looking for bullish signs, and I found
Nice.
something.
Good.
I was looking very hard, and I did find something on
Sorry,
the
guys.
15 on the 15.7 time frame minutes. That is, there is no. That's just kidding. It's on the 50 minutes. We do have a bullish order block. Um, so there is a chance that this is the structure that might be used for price to continue pushing higher. The timing to put on the high of the day is quite early, I would say. It's not impossible, but I wouldn't be surprised if um, the day's high is not yet put in. That if that is, we just closed on the 50-minute, by the way, and we closed a not so bullish candlestick, but we will ignore that. This is bullish.
Yeah. I'm
The
actually.
thing is really what you say makes sense, like, but the high is not in because also from what we potentially could see from the US dollar side, later on, it's a Monday morning. Later on, when the US markets are going to open, we're probably going to see a lot of buying action first for US dollar. It's like the kind of a natural move we see on Sundays, which then should, of course, push gold also higher. Yeah, US dollar getting more valuable means like you have to is normally something good for gold also as well.
Yeah, we do have. Yeah, I think. But this is very typical. When the market likes to trick us, right? Haven't we been tricked by the market all before? And it's actually something that happens all the time. When we think that the first thing we think, okay, this is the top. Usually, it's not the top yet, right? This is the bottom. No, it's not the bottom yet, right? It happens all the time, and even you say no. Now I saw the top combined with some other indicator. Now is the top, and it still isn't the top. So it happens all the time, and this is probably not different. It's it hasn't created that much of a bearish structure yet. We have a couple of sideways movements, some bearish order blocks being created, but I mean they're in the 5 minutes, on the 15-minute. That's not that doesn't really say anything about the high of today yet, I think.
I need to take a quick lunch break here, so I'm gonna just look at show you guys, for those of you who are coming in, and I want to update you all on my swing positions here as well. Let me just quickly check gold. Okay, yep, whatever. Okay, so we look at Euro GBP. This is one position that I have open from last week. I still technically really like this setup. And for those of you watching this, and if you're looking for a long position on Euro GBP, I think now we're in a very good area. And of course, I'm not telling you buy your Euro GBP, only to take a look at it, apply your own analysis, apply your own system, and look at this. But from a high time frame break and retest strategy, this is a very good retest. And then if you look at the lower time frames, you also have a retest on the 4-hour as well of that reload. So I do believe that this is a really good area for your Euro GBP to bounce if you start seeing a move like this. So I'm comfortably long Euro GBP already, and I have my AUD CAD long open as well. So this is on the daily time frame, and it's a setup based on the daily time frame. So I'll look for a 200 pip move to the upside, which I quite like this as well. Almost 3-hour trade. So I'm not in a hurry to add to this position. But what I'm looking at is I will start adding if we get a break above this trend line and the break and retest of this level like that. That's where I will add. I will probably double the position and then move stops up below here. Entity USD, we are seeing some dollar strength coming in. So it's not really, this is a small position because I'm building a position, right? So this is a very small position. I will only add to this if there's a confirmation. And then this trade will most likely at the end of the day turn into a, let's see, what would that be? A like 4 or 5 hour trade, I'm thinking. NCD CAD is the other one. Very similar to Euro GBP, where you have a channel to the downside, a break above the channel, down, coming down, retesting the 0.618. And for this one, I want some confirmation similar to Euro GBP as well, or if that's AUD CAD. Yeah, similar to AUD CAD, you can see right here. Same type of price action, and I'm looking for the same type of confirmation here. A break and retest of that level, I will double the position, and I'm then viewing this as a double bottom, so moving stops. So yeah, I'm definitely more comfortable on the higher time frames. I feel like that's where I should be. But it's really fun also to replicate this, because as you can see here, this is how I trade on the daily, the 4 hour, and also kind of like applying the weekly. But it's all the same. Like if I go into the 1 minute, I will look for the same patterns. I will look for the same type of price action. The only problem with the lower time frames is, you'll have one trade like this in perhaps a month, but in the lower time frames, you'll have, if you really want to, you can find hundreds of these in a day, which is obviously, you then have to be very selective which one of those hundreds that you actually select to trade throughout the day. And that I think that's my biggest issue with the lower time frames, kind of like understanding which ones I should be selecting or not.
It's also a luxury, like to be able to have so many setups that you can be that picky, that you really just can afford to only trade the one that looks perfect to you and still end up with multiple setups per week.
Yeah,
I like that.
Yeah, definitely. Okay, guys, I gotta grab some lunch. I'll be back. When will I be back? I will back after lunch, probably.
Is somebody else joining in 10 minutes, by the way? Because I have to make a move then too.
No, I think Victor is gonna do. Victor's gonna be alone. I'll see. I'll send out a message to people, see if anyone wants to get on.
You're okay with that, Victor, or if I leave you alone?
Yes, no problem at all. Or, that's actually the intention. It is that's the plan.
Happy to be rid of us.
Yep.
He won't be alone. Yeah, that's a good comment there. Still, of course, we have our beautiful community with you here, and I'm very sure they cannot wait what you have to say about the markets today, and especially euro dollar. And I'm probably going to tune in also again in half an hour or something like this to see what you have to say. Or I'm going to watch the replay later.
Yeah,
because you guys know I've become one of Victor's how to say that pupils, because I want to learn how he trades.
Yeah, there's a lot of good stuff we can learn from Victor. We had and I don't know why, but he kind of like never mentions this, but like we had a trading competition a while back, and a big one within like the 5ers, and he won that competition. So that's one of the reasons why he's here, and kind of like we had our eyes on him from that competition. So he's a really, really good trader, and really good trader. A lot to learn from him.
You can't see through the mask, but I'm blushing.
Harris says, get rid of Jonathan and Dirk. Victor is better. Yeah, okay. So if you were not a regular, I would probably ban you, but that, yeah.
Your wish is
okay, I gotta go.
That's why we are leaving now.
Yeah. All right. I'll be back later. Take care, guys.
Bye-bye.
All right. Can you hear me?
I'm sorry. I'm going to, because otherwise in 5 minutes we're going to have the same distraction again. I'm going to make a move now as well, and have a good one, and see you later.
Can you confirm that you can hear me?
Yes, I can hear you.
I was just panicking. Imagine I'm here and
Yeah.
no one is listening, or no one
That
is able
happened to
listen
me.
to
I want to say only one time, but it was more than one time. That you do a live stream, and then after 10 minutes, somebody writes in the chat, "Hey, by the way, you are muted." It's like, oh. All right, guys, have a good one. See you latest again next week, Monday. Bye bye.
Bye. Thank you, Dirk, for everything you are delivering to our community. Thank you. We
Thank you.
appreciate it.
Thank you.
Bye bye. All right, so let's change the profile so we guys can see a little bit of my face, right? All right. How is everyone? I asked that already, of course. Thank you all for the nice words. I it's I don't know how to say it, but it makes me blush. But okay, all right. So let's look at the charts. I haven't I haven't done the analysis on EU, and GU, or any other pair. And if you want me to do a specific pair, put it in the chat, and we can look at it. For sure, we have about 1 hour where we will be doing chart analysis, and I will be answering any questions you may have. Of course, trading limited to trading related questions. All right, so someone being very grateful. Yes, I'm very grateful for Dirk as well. I learned from him a lot, and I think he's a great source of good knowledge. So I'm happy to have him on board. Sure, we have someone here who is interested in the GU analysis, and for sure we will be doing that. Euro pound, yes, I have that marked as well. NAS 100 we can do for sure, and Aussie dollar against the US dollar. Okay, we have I have yeah, we can certainly look at that pair as well. There are many, and I like that comment. All right, perfect. Okay, so we have a couple of pairs that have been requested, and I'll do my best. I can't promise to do all of them today, right? But I'll try my best. I'll look for some opportunities in those pairs. All right, let's get to business right away. So if we look at this is the first day of the week. The week is fresh. We want to have especially today, have a panoramic view of what can we expect? Where are we in terms of, order block structures, who is in control, and things like that. How did the candle of last week's, the weekly candle, that is, how did it close on Friday? What does that close tell us in terms of what our probabilities in going forward? Is it, are we likely to get a continuation, or are we getting into, a deceleration process? Whatever. All these things can be read in the candles. Yes, they can, without any indicators. Not against indicators. Actually, I know they work for a fact. But this is raw price action analysis. I see someone asking for dollar yen as well. Sure, we can. We don't ignore you because of your name. Not at all, Barack Obama. Don't worry. Do you think gold can come to discount before New York? I don't think of in terms of discount or premium. I know those terms, and I could use them. Nothing wrong with them, but I don't think in those terms. So that's why I switched, or not switched. I skipped that question. All right, so let's look at EU at the weekly time frame. So what do we see? We know, of course, without going into, since we have plenty of pairs to do, I'll try to do kind of quickly through them. Do top-down analysis. We have no problem. We're here to help out our people in the audience. We everything we do at the 5ers is for you guys, right? The stream, the Discord, the events we have, they're all around, traders growth, traders development, community development. So that's one of the reasons I like being active in here and their events. All right, so let's look at. We have, of course, a neckline. That blue line is a break of structure, or a neckline. In my case, it's a quasi left shoulder head, quasi broken. We have a weekly order block that is telling us that possibly on the time that this is the weekly, right? So possibly buyers can come in at these two places. They have a high chance of cutting to the market. Whether it's going to reverse price is another thing, but they're likely, if price is going to be for reverse, it's going to be from these structures. And that is not enough for us to take the position, right? To take a trade, we need to see confirmation. We need to have alignment, different time frames. And what does price do? Even without going to lower time frames, price comes in and starts having quite some momentum coming into the market. It hasn't formed a reversal pattern on the weekly, but it has on the daily, right? We talked about this. This is nothing new. If you have been seeing our show for perhaps last week, this is the area where we have the quasi, and we had actually two order blocks, but one was already invalidated. That's this one, has been invalidated. That's why it's gone. And we have one order block that we came back to, and that quasi, which also with that close on those two candles signal a long, right? But price doesn't go in a straight line, even after signaling by forming a bullish order block or bullish engulfing. It can still retrace a couple of bars before it does that continuation move. So it looks like market is trying, right? We have that fresh order block. It's also a fresh order block being retested, but it's a entry order block on the daily time frame that indicates that the market is at a place. We have two reasons. The whole region from this point all the way from that point, we have two areas which are of interest. One was the previous entry order block that was activated by that creation of that bullish engulfing, and now we have a second chance to get in, right? You could have gotten in here, putting your stop below that structure. Now we have gotten a second chance to do that, right? To get into this trade, and that's this order block, this fresh order block that was created, that is being retested as we speak. So the question is, now we have the area. Can we go and find an entry order block on the lower time frames, right? Do we have a reason to go short, to go long, that is, if this reversal is going to happen? Well, if we go to the H4, which is the next logical step for in time frame, there are two order blocks to the left of us, right? Those two. However, they're not part of any quasis yet. As you can see, I'm going to indicate. Actually, this is just one move, so I have to start from a higher point. This is just one move. And like so. That is the established downtrend, right? And we haven't taken out the neckline. So we don't have the minimum to consider this a reversal pattern, meaning we don't have a quasi, meaning there can't be any entry order block. So that's one thing. So that means that these H4 order blocks are here, but I am unable to use them for my trade. Actually, you can, right? Because price will have a reaction from them, more likely than not, and that's exactly what we are getting here. but they're not as strong as if they were if they were being retested while being part of a quasi, right? It tells you their probabilities and their ability of pushing price much higher from that area. So we do have a bullish order block here, but it's not fresh anymore, and that's a reason for me to to wait and not trade it still. What we do have is a fresh order block that was created locally or more recently, and my idea would be to wait for price to come back to get a possible entry in here. This is the order block, right? So I have an area within the daily where I could, position myself for that long, and I go to the lower time frames to find for reasons to go long. And we have two order blocks below here on the H1, but they're not ready yet. They're not fresh, right? However, they're not fresh, so that I can't use them. And the quasi, for them to be entry order blocks on the quasi, the neckline hasn't been taken out yet. So I want to see the buyers take out this high in the next couple of bars, and then these becomes entry order blocks on the H1. So I think if this is the area, if we're going to be mounting a reversal on EU, then this is a good chance, a good place where we could be looking for a long. Right? We'll have to see. That didn't happen yet, right? So I just marked them just so you know, but those are the area right now. Of course, the market can do whatever. It can break those areas and then perhaps make a reversal, maybe later on, maybe later today, who knows? Or just, of course, continue down. That's perfectly possible, happens all the time. The fact that there is a quasi doesn't mean it's going to reverse. It just tells you that the market is preparing for a possible reversal. All right, so that's EU. So I'm looking for a possible setup that might present in this area. Other than that, if I get an entry, by the way, which is highly speculative because we don't even have an area yet, right? This would be my TP based on the daily time frame, right? Probably I'm going to have another TP with closer by because 92, I already know that that's not something I'm going to be targeting within one day, right? If I want to close that position today, 98 isn't exactly a highly likely target to have because the EU for today, the average is around 86, which is not very far, but you want to be on the other side. You want to be not much more than 100 because 100, of course, if you're expecting more than 100% of the ATR, then you're expecting a stretch, and those days are not as often. They don't come by as often as days that are below 100% that are being reached. So you want to have that probability in your favor. So that's one of the reasons. But if anything, if I get a trade or a signal, I want to have to, in any case, have this as a possible area where price might go to and maybe change direction before continuing, right? So if I get an entry, I want to at least know that there is a daily there, and price might react to it. That's the outside bar that was created. At some point, price might come and do this, and I want to be out of that trade if that were to happen because of that order block that's there. Of course, there is there's also a H4, and that could play in as to how I place my TP. Considering that there is an H4 and price will likely also have some kind of reaction to it. Okay, so that's EU. Let's continue. It wasn't as fast as I thought. Let me check the chat. Obama is here. Let's look. Okay. Some. All right. Let's look at the chart for GU. That's the other one that I trade very often. Those two are my main go-to pairs. All right. So what do we see on the weekly time frame? Did the close of last week's candle tell us anything? To me, not really. Right? It didn't reach into the order block that we had above us, so it can still be on its way to there, and it hasn't retraced into some demand area either. So we're in the middle of in no man's land in terms of the weekly time frame, right? It can go either way. And actually, the one thing it is telling us that, as you can see, this it didn't close below the low of the previous candle, but it almost did. And if it were to close below that low, tell me in the chat, what would that candlestick combination be called? Does anyone know? A little question here for everyone. It's a very beloved candlestick combination of mine. The question is the following: if last week's candle were to have closed below this low, all right, had that little little that difficulty. Okay. I think we should be okay. If you haven't noticed, I'm my throat is taunting me a little bit, but it's okay. Yeah. So the I was asking, what is the order, not order block? What is the candlestick formation? Thank you, Vinicius. Yes, it was. It was. Thank you for that. It was a little bit difficult to, especially because this is what what we do on the stream. We talk. So if the throat is not cooperating, or the voice, the vocal cords, then it's kind of difficult, right? All right, but let's look at gold.
Holy shit! What is gold doing? Wow. Okay. Yeah, am I gonna sell? Oh my god, same thing again. Can you? So I'm making lunch and I'm watching the live stream and someone says TP gold. Look at this. Look at that. Wow. Whoa. That's crazy. Am I gonna sell? Sorry, I'm just jumping in. It's taking over. What happened with Victor? Did I? No, my TP was not hit. My TP is not hit. Look, my TP is up here. Ooh. Should I close? Never. I am not closing. Okay. Look at price action right here. I am not closing. I am not closing. Okay, Victor, should I close this? No, I'm not closing. I am never closing this.
Never ever.
Okay. Okay, my lunch is getting burnt. I have to
Thank you.
get back
Thank you,
up.
Jonathan.
Well, thank you for letting me come up here and very rudely interrupt you. But yeah,
It was
that's
very nice of you.
never sell gold. Okay, see you guys later.
All right, so my I'm definitely grateful for Jonathan stepping in a little bit for that short moment. All right, so let's continue. Yes, this trade, if we can look at it, this is the structure that we talked about when Jonathan was holding that trade. I like the fact, for example, that it respected that order block very, very nicely. That's a nice indication, right? That to me, that tells me that the order block is a relevant structure that is being watched, right? This one has been invalidated, of course. Well, given this movement now, I feel confident to hold this longer if I were Jonathan. But this is still a great place to take profit, nonetheless. Anything that happens in here is still a good place to. That area is still a good place to take a profit, but it looks like we're probably going to have higher prices of gold, because this looks strong. It's not creating bearish structures, and it looks like it is. It's not. We should get buyers coming in again on the 5-minute, that is, and that's not happening yet. It may happen in the future, but it hasn't happened yet. So as long as that's not happening, see prices having no difficulty pushing, continuing to push higher. So now the situation has changed because we have put in a second swing low, which was basically the same, a double bottom there. I wouldn't be. I want to see if I were to sell this, you could be close that position. You could wait for it to show you in terms of price action that it wants to go lower, or you can just sell from that position. But so far it's setting up to continue to go much higher. All right, let's go back to EU before we had that little moment. Let's see where we were. No, we were on GU, right? And I was asking on the weekly time frame that we didn't close below this low of the previous one, this low. But if we were to close below it, that didn't happen. But if we were to have had that, then we will have an outside bar, right? An outside bar meaning the sellers are in control, and it's actually a bearish engulfing um, on steroids, right? It's an extra strong bearish engulfing, although it's not an engulfing in this case. It's not, I know, but that it's the same. The fact that you have the same, that it is an outside bar, or in this case, almost an inside bar, an outside bar, tells us that who is more in control, even if it's not an order block. It's not an order block, so I wouldn't be trading it as such. But still, the way it created and almost created an outside bar tells me that this is a bearish sign on GU. Even if the candle in this case, because it opened much lower and closed higher than it closed, it printed a bullish bar, but it's the combination, the candlestick formation is still, in my opinion, bearish, because only a lot of bearish pressure can create this candlestick combination, I mean. All right, so let's look at the daily. In the daily time frame, we have yet to create a daily quasi, unlike on EU. may still happen in the future, but it hasn't happened yet. Other than that, we have created a fresh order block that was already used as a reversal candlestick combination. That's the bearish one. What I do like is that we have an order block on the daily that is currently being retested, and that is, I think, where the opportunity is for this week. It's not because of the quasi, it's because of the fresh order block that this is, right? That I would like to see this structure being being used for a reversal. What I do see is that we have a H4 quasi. I haven't had it marked yet, but this is this area. And let me mark it better, right? So any structure that is created below that 50% retracement, let me get a few structures out of the way. So this is the daily, right? And we have a fresh order block that was on the H4, a structure that was already invalidated. However, what I'm looking for is that 50% retracement on the fib, and that comes in here. So there isn't any structure that is below that 50% retracement other than this. So I'm looking either for price to come this low before we get the possible reversal. That's one. Or we form some other structure, some other reason for price to go higher. And do we have a fresh reason to go higher? Yes, we do, which is this. And I like this quite a lot because it is within the daily order block, right? So that is, I think, the opportunity for definitely for today, but only if it confirms and switches over. We have another entry order block on the, not an entry, a fresh order block on the H4. So you have multiple areas instruction being created, telling us that buyers are coming in, and I would be interested in basically, this one is still fresh. Actually, yes, it's still fresh. So I can use basically any order block on the two or the one to indicate where I want to be buying. So this area is a great one to be watching for possible reversal points. So there you have it. That's an area of where we could see price. It doesn't mean that I want to be going long once price gets it there and that's it, right? I want to see confirmation. I want to see price actually making the reversal on the lower time frame. If it is going to reverse from this area to the left, it's likely to be doing it within this area, right? That's the idea behind it. So let's look on the lower time frame if we can find something to interest, so I can share with you guys some levels that we're going to be using if price does this. There is, let me see, on the H4 for targets, not really. And in that case, I would want my target to be perhaps here because of that daily time frame, daily structure. Let's go to the 5-minute and see if we can find some structure that makes sense to us. There isn't really that much, and I don't like using price around the beginning or the end of the week, because sometimes the price feed can be, not so, can, give, false positives. So to be honest, I don't want to be using those price candles. I will want to see something else. So based on that, I would say, yes, there is a quasi here. I see it. Let's indicate it. And we'll visit this later on to see if it is anything. Right, so we have that's the quasi, right? Goes all the way up here. And price is likely to come back to do the reversal, if this is the area to be used, right? We don't know that yet, but that's the general idea. Okay. There you go. And I'm going to, this is live. This is exactly how I trade. All day, all my entries are done this way. So there is nothing behind the scene that I do that I'm not doing currently. Right? This is an entry order block on the 5-minute. And there isn't anything in here. So I have 2 areas, at least in this time frame, 2 areas that I will be looking for. This is one, and the other one is, yes, that's one, and the other one is the structure below us. Keep in mind that the fact that I'm pinpointing and indicating with precision where I want to be entering doesn't mean that it is, because as you can see, they're quite small, quite, narrow. We're only talking about 1.1, in this case, a pip. And the other one is, what is it? 1.8, 1.6, that is. Don't fall for the trap that because there's a structure there, it's going to react, to the pip. Not necessarily, right? It can, need squeeze that structure and then come back and perhaps then move on, right? You don't have to be, it's not an exact line, although the rules are based on the exact structure. The actual movement in the market can be, have a little bit deviation from that. It's not always that's where the exact moment or a place or level where the buyers will come in. It just has a good probability of respecting and calling out, or not calling out, attracting buyers to come to the market. And if they do, it makes sense on the higher time frames as well for more buyers to come in, and that's what I'm betting on. All right, we have one question we have here. Let's look at the at gold. How is gold doing for Jonathan? And yes, it's finally breaking out. It hasn't broken out yet. I need to be precise in choosing my words. Right, this is the structure that I thought we saw that was pushing price lower. It's a 1-minute structure, isn't that strong, but now it is on the 5-minute breaking that level, and I think it's I would you could put your TP at the previous high, betting on a new high being set in if you're long, because remember, we are extended in terms of ATR. That's one. And two, you need to have some kind of rule where you're getting out, right? Typically, if you wait for the market to tell you, it's going to cost you something, right? Because it's not going to, by the time it gives you that signal, it might be much lower. let's say if it's only retesting and fake a breakout being a continuation to the higher side. Although I think that the chances are it's likely to continue higher just because of momentum, and it could continue to go higher. But I think this is a great place, to take profits as it is going into showing strength. That's a great place to be taking some profits. All right, let's. Henry thinks that Jonathan TP'd. I don't have that information, do I? Let me check if I have in the background some information. No, I don't. I don't see that. Actually, I think he did. I can see his. I can see his chart. I think he did. I think he did. I'm not sure, but I think he did. All right. So that's we did EU and GU. Okay, so what else do we have? We got some pairs. Oh yes, I was going to ask you guys. I was going to ask. I was looking at. I was going to show you Euro Pound, which I think has a very interesting price action. This is the idea. Well, we are in a monthly order block that isn't. Was it fresh? No, it's not fresh. So I don't expect price to react to it, with precision. And even then, it's a monthly. The weekly order block, we are in a place where we should see buyers come in, and buyers did come in a couple of weeks ago. That's what created this push up. But as I said at the beginning, price doesn't, go in a straight line. Even as it does what it's supposed to be doing in the right area, etc., it still does, the typical zigzag before it continues higher. Sometimes this can look something like this. Sometimes this goes a little lower. It can do all kinds of movement that may, trick you into thinking that it's going lower, but it's actually just, reversing. It's not picture perfect all the time. So, but it is what market has shown us is this buyer coming in. Nice. It looks like Jonathan got his TP in. Nice indeed. All right, so the EU or EJ, I should say, it is showing on the weekly time frame, the correct price action. If we are going to see the reversal, we go to the daily. We have a daily quasi as well. What does it do when it gets to one of these? It didn't trigger, right? Those two candlesticks did not indicate that the price, the buyers took over. However, it did have a movement up. The only thing is we did have a bearish structure that did its job and contained price from going any higher. Right? Very, very plain vanilla reaction to those order blocks. So this is the area in my mind that could be the structure that price is going to use in its fluctuations in its process of making that reversal. If it's going to reverse, it's going to likely use these two structure. The first time around, it didn't didn't create or show us that bullish it didn't show that the buyers took over. Didn't show that. However, we can go to the lower time frames and see if we can find more reaction. I like this a lot, right? Even though the daily didn't signal us yet, maybe it's going to signal us in the future. But what do we see here? As price reacted into that daily entry order block and had that push up. What did we see on the lower time frame? The H4, that is, right? We had a quasi. What does it do? It takes out that neckline, right? It needs to do that if it wants to form a quasi on the lower time frame. So it did take out the neckline, creating that quasi, and that leaves us with 2 entry order block on the H4. Not seeing that it is reversing and it's going to go higher from here, and this is the point. I don't know that. Nobody really knows. But what we can say is that, let me go back to the within the frame of the shot, of course. What we can say is that it is following the script, right? It did form that quasi. It did break the neckline, and it did react to, actually, I would argue that it reacted to the lower order block than instead of the higher one, because you can see how this beauty of a reaction, I mean, you can make this up. Look at this reaction. Doesn't happen all the time, but it's almost perfect. Gets into the order block and then leaves that wick, meaning it was bought as it got in. Only a few pipettes was allowed, for price to go lower. Buyers came in and created that very nice looking pin. Not only that, it created an outside bar in the process. So to me, we have the weekly telling us we are in a great place. We have the daily, it didn't signal yet, but it did react to that order block on the daily time frame, and we see the H4 coming in, creating that order block, coming to the one entry order block and signaling a possible reverse, right? If I were to take this trade, I would be taking the trade, based on the lower time frame, and I will put my stop below the structure that I believe was the cause of the reversal, which is this structure, right? This structure right here. This is a structure that I think made price react and create that outside bar. You could put your stop below that low, but price sometimes comes and retests that, takes it out before it actually turns around and goes the right way. So I think this is the safest place to put your stop and your target. That's correct. I don't look at double bottoms though, Hamid, but you're totally correct. Thank you for that. And where would we be putting our entry or targets? Well, the first thing is we have the high of that structure, right? Of that quasi. That could be a very logical and adequate place to put it, because this is, remember, we now have a quasi, H4 quasi, that has 2 order blocks, and one of them has signaled to us that the buyers have taken control, right? That's one thing. Do we have a daily? Not really. The daily hasn't signaled us that they took control yet. If anything, here, the fact that it reacted on the daily bearish one tells us that the bears are still in control on the daily time frame. We haven't seen anything. Maybe it needs to create a bullish engulfing on the daily. Who knows? Or maybe it's not going to reverse that much. There's nothing that we can say. Because we have a daily here, I think it also makes sense to put your TP a little bit lower, because the daily can still be at play, and if it is at play, it's a fair assumption. If it is at play, then price could react to it, meaning react to that order block without reaching your TP, if your TP were to be based on the structure, right? Something similar that happened right here. It reacted on that order block, without, with a lot of precision, without going much deeper. That can happen again. And you don't want to be in that position where it misses you for 5 pips, even 10 pips or 15 pips. It's going to be, you're better off just taking it out with less profit, but with certainty that, you have a higher probability of price reaching your TP and nothing stopping it. So that would be a great trade. This is only based on the H1. Of course, I don't trade that way. I look for on the lower time frames as well for reasons to go get in. So I would be trading, for example, this overlap on the H2. I wouldn't be in the trade as of yet. I would be perhaps use this. That's on the H2, and let's look at the H1 if we get a better one. Actually, this is much better, much tighter, and I would be using that instead. So to me, that's still fresh. To me, I would be, and if I wanted, it's either going to be a fresh order block or a quasi, and it hasn't created a quasi yet. So I'm still waiting for price to break that and maybe come back to this H1 order block, or you can do the other one, which is a little bit bigger, which is that one, which is based on the H2. Both of them are valid. And then I would put my stops, below this structure now, because I've something to base my my trade on, and then target the same place as before, which was that daily order block, right? Something like this. Now it looks, interesting, right? It's 1 to 8.6. I know it's not an exact number because we don't know where the entry exactly would be, but this would be something, perfectly. It's something that I would take for sure, and it looks very, very, very nice. And if the daily were, while this is, in the process of being printed or, play out as a setup, and I get a daily entry signal, right? And I'm already in the trade on the H4, guess what? I can target something on the daily, right? And of course, the structure on the daily would be this, right? So even then, I will have to take something off at the daily order block, but I have a reason to leave something on for the next target. And that can be this order block that we have here. I don't have it marked, but there is an outside bar here. I can target this, or perhaps I can target the top, right? I can, because I have the daily that signaled, then I'm allowed to be more ambitious on the TP, because I know I have a higher time frame telling me also that it's signaled and it's likely to go in that direction. So this is a great example of how you can expand and upgrade a trend, or not a trend, a trade, into something bigger, right? But you don't do it just, based on your desire to get more your profit. You do it based on price action, what the market is telling you, what it is trying to do, right? It doesn't guarantee you the profit, but that's the way to do it, because you're actually following what price is telling you it wants to do. That's our job as traders, right? We need to be following price all the time. So if you like these kind of analysis and our content in general, hit the like button. Don't forget, we become as a live stream YouTube channel dependent on your likes and subscription. So don't forget to show us your appreciation for the contents we put out here. All right. Let's see the chat if we have anything else before we go on to the next pair. All right, we have one great question here. I like that. Rude Soup Cat. I trade Bitcoin only using supply and demand level. Will this same stuff work on Forex? Let me know your thoughts. What can I say? Supply and demand is universal. It's how the market works. It doesn't matter what time frame you use, what asset you use. There is always that supply and demand at play. So yes, it works in Forex as well. And actually, my order blocks are a representation, in my opinion, of supply and demand. That's basically what they are. They're just maybe a different way of identifying supply and demand, but they're basically the same thing. My bearish order blocks are supply areas. My bullish order blocks are demand area. As simple as that. So yes, they do work on Forex as well. Let's look at anyone else in the chat having perhaps a question or a comment. Henry, what I do is I let the market tell me, and I try not to have an opinion on how high it can go. If it reverses, we don't know yet, right? Because the daily didn't trigger, right? It did get into that daily order block, but it didn't trigger. It didn't trigger to me yet. So maybe it needs to go a little bit deeper and then trigger, right? Who knows? So the daily hasn't switched over yet, and because of that, we did get a signal on the H4 right there, that outside bar. That's a clear signal to me on the H4, but it's only an H4 signal, and so we need to be cognizant of the time frame that the signal applies, right? If it's an H4 signal, we need to treat it as such. Our TPs, our stop loss, should be based on structures that are relevant for the H4, right? So I may have daily, this is the daily structure, but it's not a relevant TP for the H4, right? I need to stick to the time frame that has signaled me. And so far, we only have an H4 signal. If that's the case, then I need to go to what is relevant for that time frame, which is the high of the top, the top of the structure. I mean, that's one, and we have the lower border of that daily time frame order block. That daily order block. Why daily? Why do I use daily if I'm at H4 and I just said you have to stick to that time frame? The reason is that there is a hierarchy in time frames, right? So the daily can easily influence the H4, but the other way around, not so much. Actually, not really, right? So you rarely see a move that started from an H4 go on and break a daily structure. It doesn't happen that often. It happens, but not that often. But you'll not always, but very often see a H4 structure being broken by a move that started on the daily. Obvious, because it's just a higher time frame, much more volume, much more power. So I would be looking. So far, because we only had the H4 time frame signal us, I would stick to that and only do everything: the the TP placement, the stop, the time, the duration, time in the market, everything. See it from the perspective through the lenses of the H4 time frame. All right. I'm checking the chat to see if we have anything else. Vinicius, your TP was hit. Very nice. Very good. No problem. No problem at all. All right, we got another question here from Phil P asking, what time frame is the smallest time frame you look at to do your analysis? Well, it depends on what you define by analysis. If you mean, well, simply put, I go all the way to the minutes. I sometimes can go to below sub 1 minute time frame, but I rarely use it. I could go to 15 second, but 1 minute is basically where I stop most of the time. I don't do the analysis though there. I only do I start my analysis on basically on the H4, right? If I don't have H4, there's nothing for me to do, right? So that's one thing. H4, I go first, do the top-down analysis to see if we have a daily or a weekly reason as well. If I do, then I can be pending for that daily or weekly signal to come into play if it hasn't done so yet, so that I can expand my TPs and hold trades for longer than a day. But if I don't have the daily, I don't have the weekly reason, then I have no reason to hold, trades longer than a day. I would be just basing on the hourlies, and that is having at least two time frames in the hourlies that are aligned. And I chose to have the 4 combined with either the 1 or the 2. That's it, right? Either the 1 or the 2. Sometimes both, but it doesn't have to be both. But the H4 has to be there, and one of those two, H1 or H2. That's the analysis. And then I go to the lower time frames for the execution, the getting into the trade. And I need to have another analysis, right? So it's not a setup. I call them, that's the execution for me to get my signal, right? So I do the analysis on the lower time frames, on the minutes, and I do the 5 minute, the 3, the 2, and the 1. And whichever signals me, I take it. But bearing in mind that the time frame that I'm taking it, so I will be adjusting everything for that particular signal in the time frame it signaled me, right? So if it signaled me in the 2 minutes, I'm going to act and apply my rules based on the 2 minutes, right? It sounds maybe a little bit complex, and maybe it is a little bit, but that's how I operate. So we can see that indeed price is moving, having that reaction that we were expecting on the. It didn't trigger. I wouldn't be in this trade because it didn't come to one of those order blocks, right? The H4, the H2 or the H1. Yes, it hasn't done that yet, so I wouldn't be in this trade. But it looks like it's doing its job. It seems to be reversing quite nicely. All right, another question here from Phil. Thank you, Phil. Like that engagement. Thank you. Which are the favorite pairs to trade? And how many do you look at? Thanks for the last answer. No problem. Well, the favorite ones, I like euro dollar because of the spread and because of how it moves, because it's the pair with the most volume. But basically you can apply these ideas to any pair. The only thing is you need to do your back testing to gather some information on the how how to fine tune those TP placements, and because you have to adjust them when you're applying your system, you need to find out and optimize them for different pairs because they have different like spread and volatility. That's the only thing, but basically you can use the same concepts on any pair because it's demand and supply. So it works on every pair. I trade EU and GU. Those are my favorite pairs. And I don't look at any more often, not because I don't want to, but simply because those two pairs, they give me enough signals in a day to keep me occupied. And I know if I go for more pairs, typically the quality of my execution starts to drop. And I know I need to keep the quality of the execution high. And by quality, I mean how well am I following the plan? If taking more, if I'm going to be following the plan not so strict, it's likely that I'm not going to capture and extract the edge that there is in the trade plan. So I need to prioritize following my plan to the T as much as humanly possible. And if it's two pairs, if it's one pair, then that's it. You need to follow, at least in my opinion. I think the quality of your execution should be more important than the number of pairs that you trade. Some strategies, you can look at all the pairs at your disposal. Let's say if you're on the higher time frame, because trading more than one doesn't affect the other ones. But as I mentioned, I trade the 1 minute, the 2 minute, and so I need to be on the ball with these entries, otherwise they're gonna leave without me. So that's a choice, but it's relevant. It's pertinent to the strategy that I've chosen to follow, that I devised myself. I don't use fair value gaps, but I know they work, and actually I could have used them in my strategy as well. There's nothing, I could, because I see them being reacted upon so many times. I know that's something that I could use, but I have no necessity to, when something is working, we should be looking for ways to improve what we have all the time. But that's my opinion then, is not to change it too much, because it's already working. So yeah, as they say, don't fix it if it's not broken. So hi there, Void, one of our regulars in the Discord and also here Discord room, and Harish as well. Very nice, Phil. I think EU is a great pair, not as volatile as other ones, and has great spreads. As at the 5ers, we have zero spread on the majors most of the time. So you have a couple of pairs where you have zero spread, and it doesn't matter. I mean, depending on your trading style, it may not be as important. If you're swing trading, a little bit of spread, is not a big thing. But still, I would like to have the spread as tight as possible, because it's more efficient for your. You lose less because spread is basically, the wider the spread, it comes at the cost of your expectancy. So in the end, your profitability. All right. I've got one great question here. I'm not sure I like this. I don't know if I understood this AI. I don't know if I understood this correctly, but do you meant to have asked, how do I decide where to close my position? Like put my TP? Is that the question, or is it something else? Because if it is, then I think I can talk a little bit about it. Phil, yes, I think not necessarily at the beginning as a beginner traders journey, but focusing on less is can be very helpful. Uh, there are many pairs and there are many opportunities in the market, but that doesn't necessarily mean that you need to be doing all of them. Certainly believe that you need to focus on being good at one thing before you expand and do other things as well. All right, so Jonathan is back with us. How was lunch?
Yep. Lunch was good. Very
Was it
good. It tasted exactly like that $1,863 win on
I was
gold.
just gonna ask you that. How did that TP feel, Jonathan? Because
It felt pretty good. Pretty good.
because I gave you a little bit of a hard time. You were being brave and showing your trade on live stream, and I was, like making the case that it's not gonna work, almost.
Yeah. Yeah, but I mean, I can share here. You can see that I was down quite a lot. I made a 1,800 profit on that one, but I'm still only up 231. So, I mean, I was down quite a lot. I mean, I was down, $1,600 before that trade. Still up on the day though, so that's good. We're gonna do the same experiment again. I'm gonna let you guys decide on the next pair I'm gonna be trading, and we'll see. We'll see. Interesting. What have you been up to, Victor?
In the time of your absence, I was able to analyze and talk a little bit about the EU and GU, and actually also on Euro Pound, which I find to be very interesting. How actually that's what we've been talking about for some time now. This is have multiple time frames telling us that this is a great area. I'm not sure
Yeah.
yet because I don't have the daily signal that this is even with a daily signal you never really know in advance that it is going to work out. But I'm waiting for that daily, but sometimes the daily comes later on, and the H4 can get you into the trade before the daily switches. At least that's how I sometimes ride them, ride on the trade, ride those trades to TP. But we'll have to see. It looks very interesting. Because I don't have the daily yet, I would be targeting those TPs, if I in the absence of daily signals. But I really like that. And that's basically what I was able to manage to cover between while you were devouring that lunch.
Devouring, yeah. Yep.
Or neatly consuming the lunch.
Yeah. I'm thinking I might I have two challenges going on, and I might want to trade those instead. It's not nice being down, that amount of money on the day. As a swing trader, I'm, not I don't really see those type of losses in a matter of minutes like we saw today. So yeah, it's so I might see if I can do this and see if I can almost in a sense sacrifice one of my evaluations. I currently have 120k evaluation high stakes, 150 5k evaluation. I might just grab the 5k, see if we can do anything interesting with that one. It's a high stakes, and I'm not really used to to the high stakes account, so I have to be careful with the news.
There's no news today.
No,
Correct? No, there isn't.
I don't know. I haven't checked yet. So
No, there isn't. There is. Christine Lagarde is speaking, but it's a orange folder news event. Maybe I can show my screen in the meantime and show Forex Factory. So there is, as we can see, there is only one news event for today scheduled, and it's not red one. So everyone who is on the high stake account can freely trade today without worrying about that rule.
right.
Let me check something else. Oh, and I think I'm gonna take a little break.
Yeah, you do that.
I'm gonna come back in Diana when Diana is on. And actually, we have a question for Diana. That courtesy of Dirk. Dirk asks, why is it that we tend to want to be contrarians instead of following do trend following. His argument was that trend following is very powerful and should not be ignored and should be actually used in our use, especially for beginners, but everyone should be be using that trend, as much trend following as they can. But it goes against our, as Dirks put it, against our nature, because we want to be contrarian. And his idea was that being contrarian stems, perhaps he was speculating a little bit, perhaps all the way back into many million years ago, with the origins of biology, evolution, where it served us well, the humankind, to recognize the differences in something, right? Where to identify danger coming their way, that there was a, I don't know, a an
Well,
animal or
maybe you
anything.
can maybe you can ask Diana that when you get back.
Yeah. I think I'll have to make a note of it and ask her about. And Dirk was wondering if that's actually something that psychologists think, as scientifically, that yes, there is indication that is the case.
Yeah, that would definitely be interesting to hear her thoughts on that. Okay, I'm gonna
Perfect.
share my screen, and then you go off and call all the institutions and set up all those stop loss hunting mechanism that I know you all deal with when you're not on the live stream.
All right, see you guys in a short while, in about the last hour of today's stream. I, as always, enjoyed a lot with you guys. We'll be right back.
Yep. See you soon. Right. Okay. So what are we? Man, I'm excited today. I'm excited to risk some money, make some money, maybe lose some money. Maybe we'll see. What is my camera like? That does not look very good. Doesn't look very good. Let me make it a little bit bigger. That, and then take a step back. Better. All right. So I quite like EU here. I like EU for a. Yeah, no, this is okay. So this is the new account. This is not the. This is not what they want on the 50K account. This is a new one. This is. I'm doing a challenge. Oh, have I almost lost the account? What's the stop bot level on this one? What's the stop? Oh, look at that! I went from. My stop out is for. Okay, so I can risk. What? I can risk 47. Right. Okay, so I'm halfway. I'm halfway between TP and profit. Maybe I'm just... You all know what I'm thinking. You all know what I'm thinking. You know exactly what I'm thinking here. Are we going to do it? Are we going to risk it all? Are we going to risk everything I have in this account? Let me do a poll on that. Okay. Risk it all. Yes. And then, of course, not because we are professionals. Okay. Let's go. The poll is started. Yes or no? Risk it all? Risk it all? Yes or no? Ahmed says definitely not. Louis. You're right, Vinicius. This is crazy. Harai says yes. You guys are such bad influence. This is bad influence. But of course not, because we are pros. 67%. 71. All right. I like you guys. Seems like you're definitely okay. We got 29 votes. Let's get to 30. Okay, we're gonna end it right there. End the vote right there. Good stuff, guys. I like you guys. You're actually, I'm not going to risk it all. That was a better outcome than expected. Okay, so what we have here on EURUSD, let's do kind of like a top-down analysis here. So what we have right here is obviously we have a downtrend. We have higher, lower highs and lower lows on the higher time frames. We got the 4 hour. Watching the 4 hour. Now it doesn't matter what time frame we're watching. We can all see where the swing highs and the swing lows are, right? And what we see right now. Okay, so we have right here, we created a swing high here, and then we created swing low, and this is actually, the swing high because we broke this downtrend, so a swing high, and it's actually technically a higher low here, and then price shoots up, comes back down, open gap here inside the reload zone, and we have the 50% fib right here. Where is it? No, it's supposed to be here. Okay, so adding the fib from that low to that high, hitting the midpoint of the reload zone. Very, very good. That's the 4 hour. I'm definitely bullish to the opposite. The opposite now. I'm reading this chat. I'm not even. Okay. So we go down to the 1 hour, and we're gonna add another fib here. We're gonna add a fib from this low to that high right there. And then as you can see here, we're hitting the 50% right here. Okay. Let's remove that. Go down to the 50-minute. This is, we got support right here. So, and the gap has already been filled. What would be a good target for a low time frame trade right here? I think for a TP, we would want to have a profit of here. Where would the stop loss be? Well, a safe stop loss will definitely be down here. Are we looking at a 1-to-1? It seems like we perhaps could be looking at a 1-to-1. So let's add, let's see, where would we have the stop loss? So I think I would want to have the stop loss all the way down here. Could potentially put it here though, or here, and then TP around their area, looking at the 1 minute. Okay, so we have a general idea of direction here. What I'm not liking here is that the idea that we can kind of see a potentially end of this, but I'm gonna go long here, and I'm about 1% away from stop out here. So what I'm gonna do is I'm gonna add 0.25. I'm gonna risk a $11 on this trade right here, and we're gonna see if we can get that trade going. Okay, let's go long right at this very moment right now. Missed a good entry right there because I was obviously a little bit slow on that one, but we'll see. So what we want to see now is obviously we want to see a break above that level. We got the stop loss in here. Let's remove that level. Add a TP up here. Okay, that's the TP on that one. Happened. Okay, that's that one. So basically what we're looking at right here is a move up to back up to this level where we obviously had support, breakdown, a good breakdown on right there. We want to see a retest of that area. What we're trading basically is the fact that we have a high time frame break of structure, we have a high time frame higher low, we have a somewhat of a good looking trend. Actually, the local trend isn't really that good looking, because you could argue that if these are higher lows, then obviously this is a lower low. But as soon as we break this area, I think we are safe to start managing this trade in terms of moving the stop loss into profit and all of that. Okay, so while we wait with that one, I'm going to remove this screen just quickly, and I will be adding my trading view just to get a sense of what I have going on for trading this. I'm going to be moving my MetaTrader over to my right screen. So I'll be monitoring this position. And if we do have any interesting changes to this position, I will move over to MetaTrader and show you. But I always want to make sure that I can also do a quick scan for myself of the overall markets, because this is actually the first time this week looking at the markets. Because my son woke up in the middle of the night and with a very high fever, so I didn't really sleep much. So this morning, I felt like it's not the best time to scan the markets. Okay, so USD CHF at resistance, no clear sign, reversal. USD CAD looking for that break and retest. So we have a change of behavior, kind of change of behavior, but I'm adding a alert here because as soon as we get that breakout, I want to be break to low to downside. I want to be short USD CAD. Euro USD, this is the one that we have a position open on the low time frames right now. It looks like it's going to break out. We might as well monitor this on trading view as well, because it's so much easier to see. But what basically the trade that we're taking here is trading this. This move comes from a high time frame level, and also the high time frame reload zone of the 50%. We can also add the fib from the very high of this move down to the low, and that aligns with that target. So if we add a horizontal line on 0.618, you'll see that aligns with that previous support level, which also aligns with the target of the trade that we're currently in right now. And as soon as we get a break above that area, I'm going to be adding an alert here. As soon as we break above that area, I will most likely be moving my stop loss to that level. Okay, so that's Euro USD. Got that one. Let's continue going through the markets here, where I also have some open positions on a few pairs here. And you can also see that, this does give us some potential for a break, sort of a break of structure here, right? And we'll see what happens here. But there's some interesting momentum coming from those low time frame lows right there. Okay, so let's move on. We got Euro USD for a long term, a high time for swing trade. I'm waiting for Euro USD to get above the 1.055 area. Euro GBP, as I explained earlier, already long on that one. We can go into the very low time frame to see if we have any interesting price action here. This could also be a point where I would perhaps be looking at long positions on the lower time frames, but I'll stay with Euro USD, and we have 1% from being stopped out. So this could be a good example of, perhaps getting back to break even on this evaluation account, and then keep, okay, we got the breakout of Euro USD. I'll be switching over to MetaTrader as soon as there's time to make a decision. We can see here that on the lower time frames we have that breakout right there. So if we get another push to upside, that's time to secure the position, because we never know. We never know if that is a fake out or not. If it's not a fake out, which at this very moment it looks like a fake out, but if price keeps pushing higher, we will secure this position. Okay, so let me continue with my overall market scan here. By the way, guys, let me know if there's anything specific you want me to look at today. Okay, we got Euro AD breaking down, but still in the high time frame range. Not interested in this. Euro NCD. I'm gonna put an alert here because that looks like a good support to perhaps be buying. Euro CAD. Nothing. Euro CHF. I'm definitely gonna be buying this one if we get above this level right here. I like the fact, it's people say, it doesn't matter how many screens you have, it doesn't matter. And I agree with that. But I would say that as a trader, you should probably at least have 2 screens. It makes everything so much easier. So right now, I got MetaTrader looking at MetaTrader and looking at the open positions on your USD on my left side. And then you can very easily look at different time frames on the same asset that you're trading without having to, switching between applications or time frames. So definitely recommend at least 2 screens when trading. And if you don't have a desktop or you don't have a good setup, there are quite good portable screens for laptops. I have one for my laptop, so I have the laptop, and then I have a USB-C plug-and-play desk screen. It's very, very cool. Very nice to have a portable trading desk. Okay, GBP AUD. Now this is interesting, right? Because we had an idea of going long down here, and that worked out very, very nicely. Now what's happening is we're coming back down into that reload zone. We're actually inside the reload zone right now. Tommy says get a 43-inch 4K monitor. It splits into 4 and 80p areas. Yeah, I mean, sure. It's not a terrible idea, but I like the idea of having everything curved. I like the idea of actually the versatile option of being able to move the screens around. Like, for example, I got 3 screens in front of me, and then of course I got the 4th one in the background. Just playing something, some graphics, and I used to have that one above me. Andrew is saying gold is on fire. Has it really been? Did it break out? Oh my god! Oh, okay. Okay, it didn't break out. It didn't break out. Sorry for screaming in your ears. But yeah, it looks absolutely insane gold today. Absolutely crazy. Okay, sorry for that. Let's continue quickly with the overall market scan here. We got where were we? Euro CHF. Okay, GBP-USD. Now this is interesting. GBP CAD came down and hit that reload zone. I don't know. GBP NCD. Yeah, I mean, we're in profit on 80 USD. Just keeping this position open. 80 CAD. I think I'm already in. Martin, I will take a look at gold shortly. I think I'm already in all the good swing positions that I can be in terms of the Forex market. Look at that. Got a Victor block right there. Yes, we got CAD CHF. Let's go to the next one. UC CHF. UC JPY. Okay, UC JPY is obviously in a very good area right here. Very good area right here. And if you look at the at 4 hour, I really like the structure that we are creating right here on the 1 hour as well. You have I think it's quite obvious here what we're watching. I think you have a this type of move where it kind of seems like we're breaking the structure. Right. Okay. Let's see. Well, so USDJPY is definitely interesting. You can kind of see how I already have all the interesting, all the ones I like is already in the green list. I've moved everything I like in the green list here. S&P 500, 100, US 30. We got Nasdaq. Or if Diana comes on, she's probably going to be looking at Nasdaq. So it'll be interesting to hear what she has to say about Nasdaq. The US dollar index is reclaiming that level. Looks rather bullish, I must say. Let's see. I gotta see if we have any news or anything going on, because I do see a lot of movement happening in a few places. Okay, let's take a look at gold in the trading view here, and then we will move on to Euro USD. I'm definitely in a drawdown on Euro USD. Let me actually share MetaTrader quick to show you what I have. Right, so you can see here that we are now moving down, but if you add the fib here, why are you doing this to me? We're right inside the reload zone right here. So I'm getting ready to open a small position here with the same stop loss. I'm going to be adding a little bit to this position. Is a small position to we'll get a better entry. Is waiting for price to just get above that 50%. Just to tick above that 50% level, and I will add to your USD here. Vinicius says that you're used the downtrend on 4 hour and daily, and I guess I kinda, there we go, adding to that one. See if we can get another push to upside, getting ready to add some more to this position if I do see that I have volatility coming in. I'm adding a little bit more on that one right there, and then I will keep adding if we have a proper breakout. I will also start closing some positions on that breakout to kind of make some just a small profit. So as you can see, right guys, this is a small challenge account that is 1% to getting stopped out. That not sure how I got to that point, if I'm going to be honest, because I do have a few evaluation accounts that I just connect to the copy trader, and I think when I had to change the password, I missed a couple of trades, and probably it reset the risk on the copy trader. Because usually I would always know if I'm 1% away from getting stopped out, I will transition into a risking like very, very small amounts so that I won't lose the account basically. Inside the reload zone right here, I'm hoping that we're going to get another push to the upside. What does the 5 minute look like? Yeah, that's a good wick. I like that. It's going to be closing in soon. Hopefully it's going to close above that 50% so that the wick will cover the whole. Like you see that wick comes down, hits the midpoint of the reload zone, and then closes above the 50. That's how I like it. Let's see if we can add. All right, look at that. Perfect. So we got the 5 minute candle closing. We got that wick like we wanted. I'm going to be removing the. I don't want to have the trades on the chart. That's better. Go back to the 1 minute. Now this looks really, really good here. If we can get another breakout here, I'll move my stops up and I will be adding to this position. We have someone saying here, exit your USD and sell it. Nope, I'm not gonna be selling this. This looks pretty good. This does look pretty good. Okay, we got Diana. Let me know if you want me to add you. Okay, perfect. Welcome. How's it
Hi,
going?
good morning. Welcome.
Good morning.
How are you doing this morning?
I'm doing good. I'm so excited about trading here on EURUSD. I even forgot that I had my coffee. So it's probably cold by now.
That's a good
How are
problem
you?
to have.
Yes, it is. Okay, you're. I guess you're getting ready to trade Nasdaq, right?
That's right. I'm looking for a setup now. I traded some last night. Well, the rest of the US was watching football. I was looking for trades. But it's kind of slowed down a little bit right now. So I'm just kind of patiently waiting for the entry and we'll see what we get. What's going
That's
on
right.
in
You
the
had
Euro?
the
Sorry, go ahead.
you had this Super Bowl, right?
That's right.
Does
Did you
that
watch?
affect? No, I didn't. I wanted to ask, like, do you think that affects the? But okay? So the market was actually open during that time.
Yes.
That was okay.
I thought it
Oh.
would, but I really I thought maybe it might, but I didn't really notice any difference. I mean, it wasn't a real crazy market yesterday or last night for me. It wasn't really busy, but it wasn't, there was a 100+ gap down. I think it was the third week in a row now that we've had that large of a
Yeah.
gap.
Yeah. It's the tariffs, Trump starts talking about the tariffs and then people go crazy, and it's always the same thing. You have a gap down and then it gets filled.
And this one filled immediately. So I think the first one didn't fill until Friday, and then the one last week filled Monday, but not until the next morning. And then this one just immediately filled. So maybe everybody's just over it and They just
Yeah,
they don't
I
care.
remember. Yeah, I remember. I was watching. Excuse me. I was watching Bloomberg the other day, and someone came on and talked about this, and I thought it kind of made sense. The fact that overreactions to whatever Trump is saying, there comes a point where people get used to it, right? And when the market gets used to all the comments and everything, the volatility will obviously die down after a while, and it's kind of gets absorbed, because it's like you say, the gaps are getting smaller and they're getting filled quicker. So yeah, it's going to be interesting to see what he has coming up next.
So what's going on in the euro dollar?
Yeah, okay, so on the euro, I'm currently in a long. So I'm trading basically from, if I go out to the 4-hour or so what I see here on the 4-hour is a strong move up. Actually, on the higher time frames, I see on the euro dollar on the higher time frames, I see a higher high here and a higher low here. And then on the 4-hour, I'm watching the fact that price went up, had that gap down here, got filled, and we're testing sort of like a support area. So I'm all the way down to the 1 minute, looking at this type of structure where I'm looking for a move from this level, that's kind of like a medium time frame support, up to this level here. And yeah, it looks good. I'm gonna be looking to add to this position, and I'm doing this on an evaluation account, and I'm about 1% away from stop loss. So if this one hits TP, I'm definitely gonna be happy about that.
Yeah.
Let's see if I can move that stop loss up a little bit. Yeah,
It's
we'll
the
see
same
what happens
EA
here.
I use, and I love it.
Yeah, it's very good. It is very good. Okay, we're in here, so I'm going to be adding to this position. Another position here, and then I'm going to start moving all my stop losses up here. Like that. But I only have TP on one position, it seems. So I think I have to go in, and I don't think you can see where I'm modifying, but I have to copy the TP from this one. Then just add that TP to all the other positions. Right. So I'm quite happy with that. I think what we have left is like this area here. I think as soon as we get above that level, I should be all good.
Yeah, it looks good. So when you pyramid into your positions, do you have set levels where you want to add if it goes in that direction, or are you kind of eyeballing it? How precise are you with your entries?
Well, yeah, so what I do first is I enter a position at what I believe at the time would be the optimal entry area, but I don't go in with full risk. So I look at the area where I think it might be the most optimal entry area, and I enter with maybe 25% of my desired position. And if the trade goes against me, without hitting my stop loss, I can enter a new position to get a better entry, unless it's very, very obvious that everything's invalidated. And then what I do is I add to the trade the more confirmation I get. So you can see here that I had my first position was based on this. So I entered here, and then price went down into this area. Then it had a bullish reaction here, and that's where I started adding to the position. And I said, okay, so when we have a break above this level, that confirms the idea. So I'm going to be adding more to this position. I'm in with everything, that full risk. But because I have also increased I have moved my stop loss. I basically decreased risk overall on the trade, I can, if I want, enter a new, add to this position maybe on that breakout. But it's just a couple of pips. I don't really know if it's worth it, but that might be something that I might be doing. But now, when this 1 minute candle is closing above this box, I'm just going to move stop loss up. But if this hits TP, then I should have made 0.5% of the account.
Great.
Which helps a lot with the drawdown, obviously.
That's awesome. It's looking good.
Yeah, I mean, but it's it's still that.
Yeah, you never know.
This level, yeah. But yeah, it does look like it's gonna. Yes, Dirk, I did get out of the gold trade. It hit my TP actually at those highs. We were trading gold this morning, and was risking way too much on gold, and he just kept losing and losing and losing, and opened up a very big position and let it run. And if I'd say I got lucky probably on that one. Okay, Dirk says he's staying long on that one. I would love to see your ideas on Nasdaq, because I might follow you on those if we see anything interesting happening.
So far, it's just a little bit sleepy. 8 o'clock. Well, I guess we have about just over an hour until the open. So an hour 20 till the open. And let's take a look at the news today. So there's no high impact news this morning or at all today. Tomorrow we have some high impact news. CPI is on Wednesday, and then PPI on Thursday, core retail sales on Friday. So kind of an impactful news week, but nothing today. And there has been a really nice move upward, a really nice smooth move since last night. And there was, strong directional move in the NASDAQ. It's been just kind of sideways now, just kind of taking a break since, the morning started about 7 a.m. Eastern time. So hopefully we can get something in the NASDAQ. Just need it to pick up a little bit, wake up a little bit.
Yeah. So how do you prepare? So I guess you see that most of the volatility comes in when, like, at the market open, and how do you prepare for? Would the market open help you with, like, confirming any plans that you might have made before?
I'm just reacting to what the market is doing in the moment. And so the only thing that the market open does for me is typically injects volatility and directionality. And so I don't necessarily wait for the open. It just is kind of a good time when we tend to see volatility. But there are times, I can't remember what day it was last week, I waited for the open and nothing happened. So we had NFP last week. It was kind of a odd week last week. And, sometimes you get enough volatility by 7 o'clock, 8 o'clock, and I'll start trading then. But sometimes it's not until after the open. But it really has more to do with the volatility and the movement. I use a pretty tight stop loss. And so what I don't want to enter is a time when there's not much going on, because then there tends to be more chop and, the price tends to be wiggling around more. And then I'm more likely to get stopped out. So I want to wait until there is enough sort of momentum in a certain direction so that my probability of getting stopped out is lower. I could still get stopped out and I may still re-enter. But if it's just like chop action, you're just a whole lot more likely to get stopped out.
Yeah, no, definitely. Maybe you can share your screen. I would be interested to see what levels you're looking at.
Sure. It looks like there was a question to Vinicius asked about a question. So you can go ahead and post your question in the chat anytime, and I'll try to keep an eye on it.
I think
Let
I think
me.
Dirk had Dirk had something he was
Okay.
thinking about, and then Victor was going to ask that. So I think Victor wanted to ask that when he's back, because I
Sure.
can't remember. I can't remember what it was.
Okay. Let me just pop my screen over. So here's just the price action this morning.
Yep.
I have the previous week high and low and previous day high and low marked out. On the right is the weekly time frame. So we've already actually seen a lot of movement just since last night. So even just handful of hours, we've already seen quite a bit of upward movement. So price dipped below the previous day low and then pushed strongly higher from there. So we had this big gap down, and we've almost filled that gap again. So it looks like pretty strong momentum to the upside at the moment. We have some markers overhead. This is the 4-hour, the second one from the left. We have some swing highs overhead, and prices just moving really nicely higher. So let me move over to a different screen here, and I can show you kind of what I'm actually waiting on. Flip over to a different screen. And that's this one here. So we talked about this screen the last couple weeks. This is a non-time based chart. So it's not based on time. It's based on the range of the price movement, not actually like a new candle is not created just because 15 minutes has passed or 4 hours has passed. It's based on the range of the price action. So right now, if you look at the bottom, this is ADX, the blue line. ADX on the 100 range chart, so kind of like it's not higher time frame because it's not time based, but you know what I'm saying, the higher chart, ADX is 39.06, so well over that 20-point threshold. However, on 40R, we're only at 18.60. So as the night progressed, price did do this nice upward movement. There were periods where ADX was over 20, but since about 2 in the morning or so, it's basically mostly not been over that minimum threshold. It peaked above just briefly, 5:45, and then came back above 6 o'clock, but then just went sideways. So we're back below. So 18.6 on the ADX with the 40R, but prices starting to push a little bit higher. So that's kind of, what I'm waiting on is to see ADX pick up a little bit. Typically, the best trading that I do is when ADX is higher. So 20 is my minimum threshold. However, if ADX is like 30, 40, 50, that's a really good indication that price is moving directionally and can be a really good opportunity to look for trades there. So that's all I'm looking for. Just waiting for that to turn around and or pick up, I should say. And that's it. That's what we're looking for.
Yeah, my EU here just hit TP, so you can see we have the at the profits here. Obviously, it's not much, but this is on a 5K high stakes, and so yeah, we're definitely in better position. I think now how far are we from that stop loss? Well, we're looking better. So the idea here is that I'm going to continue trading this account and see if I can first of all get out of drawdown. I think getting out of drawdown is always a interesting experience to try, because you have to really be mindful of your risk. It's very important that you, like, when you're so close to to that stop out, especially on a small account like this. I find it much easier on a bigger account, because when you're on a small account like this, you're always supposed to be thinking in percentage. But if I'm going to risk, you know, an amount where I'm able to perhaps have 10 losers in a row, we're talking about like $5 a trade. And it just feels so weird risking $5 in a trade. It's much easier on a, like my 160K account, where I can risk very small, but it's still $100, But a very small trade would be $100, but here it would be $5, which makes no sense. But thinking in terms of percentage, that would be like, 0.12 or something like that. So, yeah.
Finding ways
Definitely,
to detach yourself from the money so that it doesn't matter if it's a small account or a big account. It's really,
Yeah,
it's tricky, because you're right. $5 is kind of hard to get excited about. But it matters if you're in a small account and you're trying to recover from drawdown. It, in theory, shouldn't be any different. It should be the same, but that's not how it actually works for us, does it?
exactly. It is. And I've always tried to think in terms of a percentage, especially when I'm risking. But I've also seen that it's also easier in the sense to look at your risk in dollar amounts when you're calculating how much you should be risking on the account. I try to calculate. I look at my dollar amount. So you take from the dollar amount that you are from your current equity to your stop out level, and you take that dollar amount, and then I divide that by, let's say, 15, and that's the risk that I'm going to be risking to make sure that I have to have a drawdown of 15 to lose the account. And that's really, really good with my funded account. But then when I'm applying the same principle on this account, I've started thinking in terms of the dollar amount, which it's a bit dangerous, because yeah, I mean, detaching from the monetary value of the account definitely helps with managing risk. I wanted to ask you something, because as a trader, I think we talked about this in the past as well. As a swing trader, I find it much easier to much easier to stay in positions, like look at the higher time frames, and then take fewer decisions basically, and just hold the position for longer. But not today. I've been trading on the 1 minute, and I always get, like, it's much easier for me to enter a position on the lower time frames than it is for me to enter on the higher time frames. What I mean by that is I see so many more opportunities that I kind of know I should not be taking, and I would never take them if it was a swing trade, but I take them anyway on the lower time frames, so. And I wonder where that comes from, the idea that I can be patient as a swing trader, but I can't be patient as a scalper.
Well, you can be patient. You just maybe haven't been as patient as you want to be. I mean, that's
Yeah.
one of the things about traders is, like, we really have to take extra ownership of our behavior. I'm the same way. I don't always do the right thing, but I can do the right thing. I just don't always, right? And so I think that makes a lot of sense, that the lower the time frame, the more exciting it is. The more you see the lines and the candles forming, and it happens a lot faster. It's like driving a bus versus driving a NASCAR car. It's just a lot more exciting to drive a NASCAR car. It's a lot faster. There's a lot more going on. And so having rules in place can really help. Having things that kind of prevent you from getting into a trade, that rules that you're going to follow, like, for example, the ADX, which just flipped over 20, by the way. Those types of things can kind of help slow down the process. And then your job becomes sticking to those guidelines that you've set for yourself. So regardless of what happens with the P&L, did you follow your rules? Did you stick with your rules? And that is a challenge of its own, because it's, even when you're the creator of the rules, it can sometimes be hard to do that. But that is the danger of the lower time frames. It's just a lot more exciting. There's a lot more to it. Those movements are mainly meaningless, right? The little candle, the big candle that pops on your screen all of a sudden, it basically means nothing, but it feels really important, especially if you maybe spend most of your time on a higher time frame, and then you occasionally will drop down to a lower time frame where there's just a lot more wiggle and jiggle. It can create a lot of excitement, fear, all the things that get us to act and to respond. And that's not always helpful. So, it might be worth thinking about. I have nothing wrong with the 1 minute time frame. But the question would be, why are you going to the 1 minute time frame? If you are a swing trader, what does the 1 minute time frame really have to do with your trading? And there might be an answer to that. There might be a reason that you're on the 1 minute. That makes a lot of sense. But if it's sort of inciting bad behavior or behaviors that you don't consider part of your trading system, maybe it's just too much for you. And you can do things too, like sometimes you'll hear people talking about changing the candles stick color to a more relaxing, more neutral type. I don't really like the color red, so I get rid of the color red for me personally, but sometimes people will just do all neutral candles, and that's sort of in an attempt, often not only aesthetically, but also in an attempt to kind of take away some of the power of the chart and the excitement of the chart. Because, of course, we like the bright, flashy colors and the excitement.
But I actually like that, because if when we look at TradingView, I don't have the red and green, and I really do feel like now that I'm on MetaTrader and I see, because I'm not often trading on MetaTrader, I have TradingView connected to CopyTrader, so I'm not really looking at MetaTrader unless I'm trading the lower time frames, because obviously that makes more sense if I'm looking at the 1 minute. But on MetaTrader, I had the red candles, and it really makes a difference. I really think it makes a difference, because if you're in a long trade and you start seeing red, it's like a huge warning sign. It's like you have those red, alerts going off and kind of telling you that this is danger. When price is just price, like it means nothing. It's just price is just completely neutral. Like price does not care about anyone's emotions. So from my point of view, I think it's important to view price as what it is. It's just a number, and the only thing that kind of gives it value is our emotional attachment to that price, really.
Yeah, that's right.
Tommy is asking what copy trader or copy. I'm using a copy trader called Forex Solutions, and just to be clear, we're at the 5ers. We don't have any official recommendations for a trade copier. That's the one I'm using personally. And while you can trade with copy traders at the 5ers, it's not something that we recommend. You have to really understand what that means and how that works for you and how that copy trader works. There can be potentially a lot of issues with using a copy trader as well. So just make sure that you're on the clear with that.
And there was a question a while back, why we as traders have tendency not to follow the price and try to catch the reversals. Basically, we try to follow reverse pattern instead of following the price. And that's a great question. He's just asking about, is that human nature? And I think in a lot of ways it is. I don't know that most people try to trade reversals. I'm not sure what the percentage of people who trade reversals, people who trade, follow the trend. I don't actually know what those percentages are, But I think in trading in general, we have a tendency to do the wrong thing at the wrong time. It kind of goes against human nature. I mean, even the same with buying a house. We have these ideas of what we of value and what makes sense, but our ideas aren't always in line with what actually goes on in the market. Sometimes we're right, and sometimes we can be terribly, terribly wrong. And so I think the challenge for us as traders is that being a really good trader in a lot of ways often goes against sort of our natural inclination to buy or sell. When it gets exciting, it's a lot more likely that we would be involved in the market. When it's dull and boring and just a slow grind, maybe we're less inclined. But I definitely think I don't know, Jonathan, what do you think? Most people do reversals, or do you think most people tend to try and trade with the trend? It's different
Yeah,
too.
it's a good question. Depends on, I
Mhm.
mean, depends on, yeah, that's a good question. I would say for me, it's obvious that you want to be following the trend, you want to be a trend follower, but then I kind of had to ask myself, was it that obvious when I first started trading? And I'm not sure, because I do remember myself looking at a very strong uptrend and having, for example, the RSI on the chart saying like, oh, this is overbought. This is overbought. It has been overbought all day. It has to put in the top here. And I think that, the saying that the market can stay, that the market can stay relevant longer than you can stay solvent is very true in this case, because you're going to look at an uptrend, you're going to say, yeah, okay, surely this uptrend will not continue. You can look at gold, for example. It just keeps on going. It just keeps on going, and everyone's looking for short, and it keeps on going. So I think the idea, people have this idea of something being cheap and expensive, and you have to. I mean, if you look at the stock market, I'm sure there are overvalued companies and undervalued companies, but I think that's the wrong way of looking at it. There are no discounts in the market. If you there are, I mean, we know it, there are, but from a psychological point of view, you have to watch the market and price for what it is. The market is in an uptrend, and if there's no sign of that uptrend breaking, then it's in an uptrend, and you're probably better off following that uptrend as long as the signs of bullishness is there. And a lot of people, I think, are quick about trying to fade a strong move because they believe that it's overbought or oversold. So I think if you look at experienced traders, there's definitely more trend following traders, I would say, but I would argue that there's probably more money being made fading moves than following moves. And when I say fading moves, I basically mean trading against a move that is like if you look at Euro USD, for example, if it's above its ATR, or it's above the ATR in a way that it hasn't been all month, then you can definitely think that what is the odds of Euro USD trading above this level? And if you look historically, there are certain levels on the charts where statistically Euro USD should not be trading above this level for very long. And if you're able to fade that, the risk to reward is huge. And but yeah, it's, you know what, I don't know. I don't know. It's a good question. I think I kind of tried to make it sound like makes sense, but I don't know really. I think I want to believe that there's way more that, swing traders. I mean, trend following traders, but I don't know. What do you guys think in the chat? Because the saying that the trend is your friend is quite useless if you don't know really how to identify the trend and how you know that what a good trend looks like. Everyone says like follow the trend is your friend, without maybe knowing the details of signs of a trend shift and things like that. You know, this is a good example. While talking about this, I actually looked at potentially going long here.
Are you on the NASDAQ or on the Euro?
No,
Euro
this is
USD still?
This is Euro USD, and
Okay.
I wanted to go long here because this is an uptrend. Like from this low, then you have a low, high, higher low, higher high, and higher low. And I wanted to go long here. But then if you go out to the 15 minute, it's actually still kind of an uptrend, but I don't know. Yeah, I'm not sure where I was going with that. I should have went long. That's definitely the case.
I just started a long position on the NASDAQ. So it
Well,
did.
show us your screen. We want to see it.
All right. So we did just start to pick up a little bit. Let me see. One other thing that I wanted to say about that question about the reversals and trend following is related to emotion, right? There's a lot of fear and let's see. I think my screen should be shared. A lot of fear that is related to, the emotion of missing out. Like we talk about FOMO a lot and we don't want to miss out. But we also really enjoy being correct and being right. And so, as traders, I think one of the best services we can do for ourselves is let go of that idea of being right or being wrong, that this is a probabilities game. And we have no idea, despite what you hear on social media and someone saying, I know this is going to happen, or here comes whatever. We really never, ever know. Nobody knows. And anything can happen. And traders can have two different ideas and both can lose money or both can, make money depending on how they manage the trade. And so I think fear and the excitement of the market plays a big piece of that. So always helpful to keep in mind, we talked about the last couple of weeks, thoughts and emotions and how they impact your psychology, because they are your psychology. That is your psychology. Emotions are natural and normal and automatic, and really it's your thoughts that you have control over. And so focusing on that. So,
yeah, I must say first, like I think that that is very, very important what you just said, and I really do hope people understand the power of that statement to be able to control your own thoughts, and like the idea of we talked about as well. You're looking at yourself in the mirror and you keep forcing yourself to smile, and that will actually make you happy. Like you're tricking your brain to be happy. And I think, that is obviously quite useful in life in general, but in trading especially useful, because if you're in a losing position and you keep looking at that, you took the trade, right? You took the trade, you have your entry, you have your stop loss, you have your TP, and you're taking the trade and you're not feeling anything. But then as soon as price goes against you, you start feeling negative emotions. But nothing has changed. Like it's still the same idea. TP stop loss has not been hit. It's still the same market. It's still the same idea. Everything is valid. But you start thinking about that loss. And then, so being able to instead, tell yourself things that are, things along the lines of, I've accepted the risk. It doesn't matter if it gets stopped out. There's going to be a new opportunity. Things like that is, I believe, very, very helpful, especially if you're on the lower time frames, because then you have to make those decisions many, many times in a day.
Right. And I think what you said is really important. Is this is not only specific to trading. This is true in everything. People are drawn to confidence and in social relationships, dating relationships, and there's a reason for that. But of course, we don't always feel confident. If you're you're someone like me, there's been a time when I've taken a string of like 4 losses in a row. And sometimes it doesn't bother me at all. It's just, I'm very like, whatever it is, what it is. And then I remember a time in particular where one week I felt indifferent to 4 losses in a row. The next week I had 4 losses in a row and it really bothered me. So, same exact scenario, same number of losses. I had just gotten off a week where I had experienced that and ended the week well. But the second week, it really bothered me and it felt personal. It's not personal, but it felt like it was personal. I don't know what was going on in my life that caused me to view it differently, but that week it shook me, whereas the week before it hadn't. And so, even in that, you're just continuously checking in with yourself. And, I don't do it perfectly, but that is such a helpful power to have, that goes beyond trading, the power to really like hone in on your thoughts and your rational thinking and use that to your advantage. It doesn't change your trading at all. You're still going to take losses, but thinking logically and critically about those losses are really a big deal. Even, I'm sure you've seen that chart where it shows like your win percentage and your probability of taking a large string of losses in a row. I keep
Yeah.
that front and center of my mind because it doesn't seem like you should take 8 losses in a row. That doesn't seem, it seems like something's broken and you want to shift and adjust. But that can happen even with a 50% win rate, even a 60% win rate, that can happen. It's not super probable, but it does happen. And it doesn't mean anything is wrong or anything is, needs to be adjusted. It just happens. But
Yeah.
those are examples of how you can use your mind to your advantage to keep yourself on the right track and make sure that you're keeping your mental capital preserved.
Yeah, you said something interesting there with the chart there with the the number of losses in a row. I don't know the exact numbers, but I read an article about how we as humans are quite bad at understanding the idea of probability. So they took an example of a coin flip. So let's assume you're doing a coin flip and every flip is totally fair and you have exact 50% chance of getting let's say heads, and over the course of 10 flips you have like 0.1% or something chance of getting eight heads in a row. But if you increase the number of flips to 1,000, there's going to be a 97% chance of having 8 flips in a row. So you're guaranteed to have long losing streak during that high number. And I think that's what trading is, right? It's the law of big numbers. And I also going to go back to the idea of like controlling your thoughts. I remember like when you're in a losing position, you have anxiety over something that haven't happened, right? Like it's not happening. Like it's you could either like it's not a loss until it's actually a loss. So being in drawdown on a position, you're thinking about the future in a way that has not already happened. So you're creating that pain, a pain that doesn't exist, which is it's interesting how that works, because you said like look at the situation from a logical point of view, and it's not very logical to experience pain from something that hasn't happened and might not happen.
Mm-hmm. Yeah, absolutely. We do that all the time, right? If you're a parent, especially, you worry about the things that are going to happen to your child that is just very unlikely that's going to happen, but still they feel like really serious, not beliefs, but like concerns that we worry about. And most of our worries never come to fruition. That's just part of like our anxious mind where we imagine up these worst case scenarios. And, same with trading. It's the same thing. And like we worry about not only that, but we make it even more complex by adding meaning to what those things mean. So if I take a string of 8 losses, it means I don't know what I'm doing. No, it doesn't. That doesn't mean that at all. It just means, the probabilities weren't on your side.
Yeah, it just means that you're trading. It's just part of
Exactly.
the game. I think there's a quote. I don't remember who, but some Stoic, I believe, said like you're suffering more in imagination than in reality.
Absolutely.
And I think
Absolutely.
that's a quite a good way of looking at it. Like things aren't really as bad as they seem. We as humans definitely have a tendency to, overemphasize negative emotions. Okay, but let's. I really want to see what you got going on Nasdaq. I believe you're long, right?
Yes, I'm long. And actually, let me do a different screen here.
Yep.
Somebody was asking about SMT. I personally don't use SMT. There's nothing wrong with it. It's just not part of my system, that how I trade. But that can be a great great way to. Okay, so I think let me just double check. You can see my black screen here. Yeah. Okay.
Yep.
So here we have the ADX that we were talking about. The ADX is the blue line on the bottom, and ADX has been quite high, for some time on the. Again, I don't know what. Maybe someone in the chat can help me out. I don't know what to call it. It's not higher time frame because these are not time-based charts, but on the higher order chart, the 100R chart, it's been over 20 for a long time. But on the 40R chart, which is on the left, it had not been over 20 until just recently popped above. And so I'm looking to enter a long trade here, which I did just kind of like before it popped higher, when the ADX went over 20, so the minimum threshold of 20. And then I also use these are called dynamic. So the price action is the kind of the pink and green color. The white and I guess blue or purple color is called dynamic trend candles from North Star Day Trading. And basically what this does is it just kind of helps elucidate the trend for you so that you can often see what the trend is, but I like to use indicators to help me be objective in seeing the trend. And so I'm looking for the bullish candles here to show up, which is these are the white bullish, what did I call them? Dynamic trend candles. And so that's what I'm looking for. And we got a little pop and now price is pulling back. So I do have a tight stop and I am willing to take multiple entries if I do get stopped out. The idea is to take a really tight stop. If it goes in my direction, then maybe I'll catch a wave. And if it doesn't, I can very easily get stopped out for a small loss and then try again. So it's kind of looking like, if price doesn't continue on, because, excuse me, it is pulling back just a little bit, could get stopped out, and then I'll need to look for re-entry.
So where do you have your stop loss?
My stop loss is it's 10 points below where I entered. Let me see here. I have too many screens open. Is this not wanting to show me? 21,762.25.
117. Okay.
So I entered right around 773. And so just, it's just a 10 point stop. And the idea is, again, I have played around with 10 and 30. And it is hard to sometimes, at least for me, hard to accept a 10-point stop loss because it's not very much and you're often going to get stopped out. But what it does is it allows you to pretty quickly and pretty easily, when it does go in your favor, to take profit. Versus with a 30-point stop loss, you have a lot more room to the a lot more wiggle room. But if, let's say, price comes almost to your stop, doesn't quite tag your stop, but it moves 29.5 points against you, let's say. Now, in order to get to your target, it has to move like 60 points to get to a 30-point take profit. If instead you have a small stop loss, like a 10-point stop loss, yes, you might get stopped out, but then you have an opportunity to reevaluate, and you could take 3 attempts. And that way, if price just completely tumbles and goes against you, you're not in it and you don't have to worry about it. But when it goes in your favor, you can get a really nice R multiple.
Yeah, no, I think that's quite similar to the way Victor is trading. He's trading with like extremely tight stop losses so that he can have, obviously many trades hitting stop loss, but then when he has a winner, it's usually a very big winner, and he makes all of that back in just one trade, and probably more as well. So it's interesting how a lot of people are just trading very, very differently. I'm actually looking at NAS here, and on the lower time frames, I quite like a pullback back down to like 653 ish area. Quite like that. I'm gonna see if I can open that up. So on, let's see. Actually, you know what? Let's see if I can open up Trading View instead. It's gonna be much easier to show what I'm looking at.
While you're looking for that, someone had mentioned something along the lines about trading reversals. I forget exactly how they said it. I follow the trend by trading reversals, Andre said. And I actually love that because if you're familiar with the 2022 model, ICT's 2022 model, that is a very effective model that you can use. However, it's even more effective if you understand what the higher time frame idea is and what your higher time frame bias is. That way you can wait for a pullback, or wait for what might look like a reversal, or even be a small reversal, and then get in on that trend at a better price.
Yeah, definitely. I mean, the way I'm trading trends is to, so on NAS here as an example, I'm not like I want to, or do you mean that you're getting into short here, or you're looking for long slower?
I'm saying, so Andre's talking about trading reversals following the trend by trading reversals. And I think that's another way of saying waiting for a trend. Let's say it's a uptrend, waiting for what I would call a pullback, and then getting in at a better place to ride that trend higher.
Yeah.
It kind of comes down to semantics a little bit, but the idea is, you can either enter while the momentum is moving, which is kind of what I'm doing at this point in this trade that I just talked about, or you can look for price to kind of like relax a little bit, come back in, and then hop on that to looking for a push higher.
Yeah, no, I think that definitely makes sense. I mean, there's a lot of different ways to ride a trend. I do think the I mean, in theory there's two like Henry says, continuing the trend that pulled back to it's the same thing. So basically what I do is I look for a move down here. So if Nasdaq can come down here and then give me a bullish reaction within this area, then that's where I'll be buying. But honestly, I think any swing point here will will do actually. So just waiting for that retrace. I think this will be my first, if I enter, that's going to be my first trade on Nasdaq in, I believe, many years.
Wow.
Many years, yeah. I don't know
Well, it's
what
a great time to be trading the NASDAQ, that's for sure.
Yeah, I think there's definitely lots of volatility. It seems like the spreads are okay on the 5ers. I mean, we have very good spread on the Forex pairs, but I don't know about the indices. Let's get 162, it says.
Somebody said my hand always submits a trade the opposite to what my brain is saying I must do. And that's funny to me that can, that could either be good for you or, bad for you, depending on what your brain is telling you to do. Because a lot of times the way, like, what makes sense to our brain isn't necessarily what works in the market. And but I think having rules, I'm not a natural rule follower. I have never liked rules as a kid, as a teenager. Not my favorite thing to follow rules. I like to do whatever I want to do. However, rules really can be helpful as you're trading so that you can keep yourself from, unless, like I said, unless it's working for you, unless what you're doing going against what your brain says is good for you, and that's different as well. And then somebody else said one of the significant advantages of using an indicator is that it takes your emotional judgment out of the equation. Net change positive in price is greater than VWAP, requires no judgment. It either is or it's not. And I absolutely 100% agree with you. There was a time when I was really heavy in indicators, kind of got a little bit disillusioned with it. Thought it was way like, just like it seemed like there was kind of a time in social media, especially like on YouTube, where it was very kind of in vogue to be like, oh, I just read price action. I don't need indicators. I read price action. And that may be very cool, but it is very difficult to do that absolutely 100% consistently. And consistency in your trading is a really big part of your probabilities, because when you do something over and over and over and over and over again, you can understand exactly what the probabilities of your system are, versus when you're doing it by your own judgment. Inherently, there's going to be inconsistency in what you're doing. So I agree. I think, indicators are not magic, but they do allow you to be objective in your decision making.
Yeah, I 100% agree. If you can build a system on indicators, then just do that. I think it's so much simpler. However, it took me many years to have a good read on price action, but now that I do have a good read on price action, and as you said, being consistent in that as well, just basically looking at the exact same thing. And this is exactly what I'm looking at. It's basically one move up, add the fib, look for a move down, and then this is basically it. But it took me probably, I don't know, like 4 or 5 years to know what exactly. And the thing is, what's funny about that is I learned that through indicators, because like the indicators I was using, especially like you look at this indicator that I've coded, is based on like that's, so I don't have to add this indicator. I mean, I know this is where the EMA cloud is. If I add that, you'll see that this is that level where I want to be buying. And then things like the weekly open and the monthly open and all of things like that, that's inside this indicator. It's kind of like I know where those levels are without really needing to have the indicator on. So indicators
That's
are
cool.
very very good to have to create a rule-based system. Okay, so it looks like NAS is continuing higher. Did you get stopped out?
Mm-mm.
Okay, so you're in good profit now then. Well, in decent profit. I
Yeah.
don't know. Maybe it's around your entry. No.
No, it's above my entry. My entry was at 773, so about 10 points in profit. So I'll take partials. Assuming that it continues on. I typically take partials at I take half off at 30 points and then move to break even, and take the next half off at 10R is usually what I go for. That means that if it hits my initial take profit and then I get stopped out at break even on the trade, I would have made 1.5R. That tends to be a pretty good way to do it. I'm looking at, modifying this a little bit, because it's a long ways from 3R to 10R. So I'd like to add maybe a quarter off at 6R. But
Yeah,
we'll
that
see. We
definitely
have
makes
the
sense.
open in a half hour. So
Yeah, I mean that there must be a strategy or somewhere to test the look for patterns on the open. Look for certain price patterns that might form when the market's open.
mhm. Yeah, the open can be a little tricky because on the one hand, there's a ton of volatility, which can be really good. On the other hand, you can enter a trade and instantly be stopped out for a 10-point loss. So
Yeah.
it's kind of like it kind of comes with a mixed bag. Um, Obviously, trading the open can be very exciting. Whoops.
Whoa, your camera went away
Sorry, I
there.
don't know what happened there. That was that's the second time it's kind of gone squirrely on me today.
Weird.
Sorry about
Well, I
that. Let me
gotta.
see if I can get back. Give me 1 second here.
Okay, so interestingly enough, we have on the Nasdaq we have a 1 hour signal on the indicator that I just showed you. So if you go to this one right here, it should be a. Actually, that's not really a good signal, but this is a strong move. This is a strong move right here.
I didn't
And
say
you coded
anything yet.
this yourself? This is your own indicator?
Yeah.
Wow,
I didn't
that's
see
so
anything
cool.
yet. But hello, Diana. How are you
Hello,
doing?
hello.
Good morning, Victor. How are you?
Good. I'm doing good. Are you better yourself than last time?
I'm definitely better. Thank you for asking. I have been sick all week. I thought,
Mm.
I thought I would be back at it, but I have pretty much barely left the house. I am getting much better, but if anyone else is dealing with flu where they live, man, it is a nasty
Yeah,
experience.
and
You had
this
it
year
too. Yeah.
my
Are you
my family's been sick since the beginning of December on and off, and
Oh
it's
my
just been
goodness.
absolutely crazy. My fiance has
Terrible.
been coughing like for 2 months, and then I started coughing, and I've been coughing for a month. My kid wakes up in the middle of the night. Like it seems like we talked about this, Victor. Like the probably because of COVID, the flus are have gained some momentum to
Power.
to the
Yeah.
upside.
Oh man. Well,
Definitely
last year I
breaking
got
out.
it and it turned into pneumonia. So
Yeah,
I hope that's just not.
that's not fun. Not
Yeah.
fun at all.
Yeah. My kids have all had it too, and it's terrible. So,
I think
Victor, are you
had.
better? Sorry.
No, Victor, go ahead. Victor's always good.
I actually I didn't get that severe
Oh,
as you
good.
guys are describing, but
Oh, guys, I gotta run quickly. I'll be back. Okay.
no problem. I do have I did have and have been having some difficulties with I have some throat um it's I wouldn't call it pain, but it's discomfort. And
Mm-hmm.
if I ask too much of my throat, then it will let me know that I'm getting to the limits.
Oh.
And today, for example, was a was an example of that incidence. But I'm good. I feel well. I'm not. I wouldn't describe this as being sick, but I'm not 100%.
Well, I hope you can get some vitamin C and take care of yourself, rest up, and avoid getting the full blown then, because
Yes,
it's pretty
I
brutal.
certainly I certainly don't want to you know push my luck, so to speak.
Right.
So, and how has your trading been going last? Were you able to trade despite your not feeling that great, perhaps?
Yeah, I did trade last week. I would say it went okay. This has not been my best like past 2 weeks or so. I
Mm-hmm.
had a really really good end of the year, and
Okay.
January was okay. But I don't know, the last 2 weeks or so has been kind of, just annoying. I know that sounds like uh I don't know if you're like this, but it's kind of like when my system isn't giving me the excitement and as much success as it can,
Mm-hmm.
then I tend to do more behavioral things that are not as ideal. And then, it doesn't go as well. And so it's like a vicious cycle. And
Yes.
so I am really like focusing this week on just I don't care what my P&L is. I am just going to do what I do, trade my system, try and get 100%, adherence to my trades and my system, and just be okay with that. So, how about you?
I'm very familiar with that cycle, and I've done it so many times. I think I know it so well inside out. But lately, not lately, but as I progressed, I it is very hard though to correct that. But
Right.
slowly, I became insensitive to to those ups and downs. So in a certain way, you become you desensitize yourself of those bigger wins and bigger losses and drawdowns, so much so that it of course I feel it. You're always going to feel it, I think, but it doesn't elicit anything, at least not as much as before, in
Mhm.
causing me to start a pattern, derail, and so on. So but I must admit it's not easy, because you're actually fighting yourself against yourself.
Right.
And but I don't that doesn't affect me as much. But of course I'm not immune. It If I don't watch out, it will happen from time
Right.
to time still. I mean, we're humans. It's not like you're never going to be perfect. That's
Right.
the reality.
Yeah, that's it. And that's
But I
okay. I mean,
Mhm.
lucky for us, we don't need to be perfect to trade well. Obviously it'd help if we were perfect, but
Mm,
that's not a requirement. You don't have to be. Loss and mistakes can be built into what we do. Just like a business. A
mhm.
business has planned loss, right? That's part of what they
Exactly.
do. And as traders, it's the same thing. We can still do well even when we're not, you know, executing perfect. We're always striving to execute perfectly, but it can't be that, razor thin.
Yes, actually, you made a very, very good point. That you don't necessarily need to be perfect to be a good trader, to have success, to earn good money. You don't have to. We may think you have to have a very high level. Yes, the level of your skills needs to good, but it doesn't level skill does not mean perfection.
Right.
Um, and you said another thing, that you 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 accommodate the fact that you have imperfection and you will keep on having them. in your process, and you know take margin of error in your risk management, or you build in some other ways to mitigate those risks. And you made that analogy with a business. In business, you have things that happen that shouldn't happen as well, like, you know, inventories being stolen, right?
Mhm.
It happens, doesn't not supposed to happen, but it happens. And what do? You try to quantify it, and you, if it's, you know, big enough to do something about it, then you build in countermeasures,
Right.
and you count on them, you know, a certain percentage, even though you do everything you can to avoid them, will be lost because of, you know, they're perishable, or they're being lost, or being stolen, or whatever. It doesn't really happen matter the reason actually for the analogy, but
Mhm.
it's the
Right.
same thing. We have that in trading as well. And the first thing we can do is to start to quantify them, and that's where the journaling comes in. How much, when do we start losing control and start deviating from our plan? How often does it happen? And what does it cost us?
Right.
What is it if I had executed my plan perfectly? And what am I actually getting in terms of execution? That gap, that difference is the cost. And we try to keep that cost as little as possible, but there will be cost because we're not perfect. So, but everything starts in quantifying it first. And if it's big enough, and usually it is at the beginning, it's quite considerable, it that will be the motive or the motivation to do something about it. Because look, I was supposed to earn this today, and instead of that, I lost, or I
Right.
earned less. And we can actually, you know, see what it's costing us by not following our plan. So I think that's a very good point you brought there, Diana. We had a very interesting conversation today with Dirk. And Dirk actually, I don't know if it was asked before, but Dirk had a question for you. In we were talking about trend following, and I believe I said, you know, trend following is something very powerful, and you should not underestimate its power, and we should be embracing as much as possible. And Dirk said that he has a theory that um, that we as humans, we tend to want to be contrarian, and he thinks that that is because our primal instincts, and that this is where you came up, because he said, I need to ask Diana this, because of course she's the expert in this field. And the question was, he has a theory that perhaps in the primal, our, you know, evolutionary you know, phases, it was good for our survival as a species to be able to you know, recognize the break in structure, or the difference in, let's say, I think he mentioned forest. When there is a, this forest looks different, I think there is a predator here, right? To be able to identify and pick up differences in order to survive. And I think he you know, he had that theory, and he wanted to ask you, is that a thing? Is that why we traders, especially you know, all traders, but beginners traders, they're trying to catch the the bottom and catch the top all the time, because they think this is the you know, they want to be contrarian. They want this is where it changes, instead of going with the trend. What are your thoughts on that?
So we already we talked about this morning, but the way that you frame the question is a little bit different. So I'll this might be a little bit different answer than before, but it does seem like your question is framed a little bit different. So it's kind of interesting. As I don't know if most people tend to be like reversion traders or trend traders. It seems like, from my experience, more people tend to follow the trend or talk about that than reversion. I don't know if that's true or not. But to your question, we as humans are programmed to avoid pain and loss more importantly than to seek pleasure. So if you have a $500 loss and a $500 gain, that pain of that $500 loss is greater than the joy of that $500 gain. Even though monetarily they're just opposites of each other, it would make sense that we would experience them as the same, but we actually feel the loss more profound. And that's because of how we're programmed to survive, not just enjoy, right? It's more important for us to avoid danger and avoid death and avoid loss than it is to enjoy, the pleasurable sides of life, because it's more important, more pertinent for our survival. And so, as far as that goes with trading, a lot of times I think about that with regard to taking a loss. I haven't necessarily, I don't think, ever considered it in relation to trend following or reversion trading. I do think that in general, though, a lot of times what we do naturally or inherently tends to be different than what we should optimally be doing as traders. And there is oftentimes a tendency. So you guys have the way I first heard the question and then the way you're saying it is a little bit different. So hopefully I'm not getting it confused. But I do think that there is a tendency to want to avoid missing out, avoid being wrong, this kind of thing. And I think there is a tendency, just like flipping a coin. If you flip a coin 10 times and it's been heads every single time, there's a tendency for us to think, well, the 11th time is, we're due for a tails. So it's, I'm going to go with tails, right? When the reality is the probability is 50%. It's exactly the same. Nothing has changed. You are still just as likely to get a heads as you are to get a tails. And so, I think that can be part of it, is that we have this tendency to think like it can't go on forever. And yet oftentimes, look at the US housing market. It does. It just keeps going and keeps going and keeps going. And so I just think in general, we have a poor awareness of how long a trend can actually continue. And so it's not uncommon for people to think, well, surely this must be the end. And we're just not very good at predicting that oftentimes.
Very well. Good answer. I enjoyed it. Yeah, I think it's fascinating. It's fascinating how we and many people are different, but in certain ways we all have similar responses to pain and risk, and how we, if you pick anyone, from the street, so to speak, someone who may not be, having been working on themselves for risk management, things that we as traders we do, but you've picked someone from the general population, they will probably have a very similar, one to another, a very similar reaction to loss and gain.
Mm-hmm.
And while they're very different individuals,
Yeah,
but they're rooted primal responses that go way deep in how we process information, emotions, and perception. And that's why it is so difficult to be a good trader. Sometimes it requires you to let go of those primal emotions, and it's kind of difficult. It is not kind
it's
of very
very,
difficult.
yeah. If it was, if it wasn't so difficult, there'd be a lot more traders, right? A lot more successful
Exactly.
traders, but absolutely
Exactly.
it's very difficult. There's a couple comments I just want to pop into. One is really interesting. It says, for me, a loss is no big deal. 2 losses, now I start being fearful of the next trade. Another loss, and now I'm annoyed. And 4th loss, I stop caring. That's so interesting because, everybody's win rate is different, but 50% is not an uncommon win rate. That is fairly, fairly reasonable. Some people have much higher, some people can have lower, but a 50% is not unreasonable. And if you think about that, by the second loss, he's saying start to be fearful. So how many times have you flipped a coin, had heads or tails, and then flipped a coin again and got worried that you would have the same, the same outcome, another tails or something like that? By the third, I'm annoyed, and fourth, I stop caring. I'm smiling because I know exactly what they're talking about. I mean, it's not probable. It doesn't make sense according to the logic of, the probabilities of flipping a coin. And yet I totally understand where you're coming from. You take a loss and you think, oh my gosh, please let this next one be a winner. And the reality is, like, you are setting the bar. I am setting the bar way too high for myself when I do that, because it's not realistic to think that you're not going to get strings of losses or strings of winners as well. And then somebody mentions Best Loser Wins, the only book you need to learn to control your mind during trading, not a single strategy, and they're all about controlling your emotions and your mind. I agree. That's an excellent book. Emotion, stop what I am thinking or feeling, challenge. Is it true? Choose. What would professional me do? I absolutely love doing. I love this. To me, the number one is the thinking. So absolutely, like, what is it that your thought, emotions, there's only 7 basic emotions. And so it's typically pretty easy to identify what the emotions that you're feeling. The question to me is, why am I feeling that? Why am I so angry? Why am I so fearful right now? What is the thought behind that? What does this stop out actually mean to me? Speaking of stop out, I took a stop on this trade that we talked about earlier. But what does it mean to me? And is it true? I love that Andre said, is it true? Because a lot of times the thoughts that creep in our head while we're in the midst of trading are not true. We end up getting carried away under the stress of trading with all these thoughts that are like, no, taking 4 losses in a row doesn't mean you're going to fail at trading. Doesn't mean you don't know what you're doing. We come to these like catastrophic thinking. That's just simply not true.
That is very true. We tend to give different meaning to the same thing depending on what we are feeling, what we are how we are feeling. We are interpreting the same fact differently depending on if we are in a trade or not in a trade. Like, don't we, and I think people in the audience and you as well, Diana, would recognize this, that if, let's say, you're in a trade and you're in pain, if it goes down, you feel that, right? Once you close that trade, it can go down and you don't feel anything.
Yeah.
It's doing the same thing. It's moving the same amount of pips, but but by some reason, obviously the reason is because you're invested in it. You have pain. You're, suffering, quote unquote. You have skin in the game. But it's so true. It's the same movement, but the way we interpret the meaning of it is completely different. And not only the fact that we suffer more when we have the trade open than not, it's also the fact that once, let's assume that this has, I remember this, this would happen to me many years ago, where I would see a trade, and because I'm in the trade, because I want the trade to do something, I start interpreting or looking for patterns that fit that which I want it to do. And once the trade is closed, I actually don't have that bias anymore, right? And I actually start reading price better.
Interesting.
Right? And I used to see that all the time, that let's say let's say something I'm in drawdown, And I would interpret that, this is not going anywhere, and more easily get to the point that I need to get out of this trade. I close the trade, and afterwards I say, but nothing really happened. There wasn't any signal. There wasn't anything that should have made me close that trade. But it was myself being in a certain emotional state of mind that changes the meaning that I get from the same facts.
Mm-hmm.
The facts didn't change, but the meaning of those facts changed depending if I'm in pain or not.
Right.
And that's so fascinating how our mind works, depending on how our perception of reality changes depending on of us, while the reality doesn't change. It's we who are different, and our perception as an extension of that, but the reality didn't change. It's the same reality. The probabilities are still the same.
Right. I've noticed that with myself with stress. When I'm stressed, I don't necessarily cope with loss as well as I could, and that could be just like you said, your perception or your reality is the same, but your perception is different. But also your ability to cope with stressors that come on you is different. Your capacity is different. And that's absolutely so true and really important information, right? If you, like this summer, I moved and I continued trading, and at some point in my career, maybe I will be in a spot where I can move and just continue trading as normal. But it was not the case this summer. I made it substantially harder for myself. I was not able to do the work. Probably I didn't have the natural reserves anyway, but also I probably was not doing the work to make sure that I was staying in that good headspace where, the losses didn't matter. Of course they matter, but they don't impact you, right? That's where I want to always be, is where losses are just part of my day, and they don't bother me, they don't impact me. And if they do, I can address it right away and nip it in the bud, but I was not able to do that. So Andre is asking, how do you become desensitized? And then Vinicius said you get immunity to loss. And I think that's absolutely true, is you can desensitize yourself to losing, because we know for sure, of all the certainty related to trading, it is certain that you will take losses. That is guaranteed. You cannot get around that. No matter what people say, nobody trades without losing. And so how you get desensitized to it, I think that prop firms are great for that, because to me, you can take a lot of losses and you're only ever risking your fee, right? You can also do it for free with forward testing on TradingView if you want to do it that way. But just taking a lot of losses is really, really important. And then also practicing ahead of time. So I saw a reel or Instagram reel or something where they were showing a sprinter, and he was not sprinting. He was, on the sidelines, and other people were sprinting, and he was quiet and silent, eyes closed. And then when the gun would go off, he would do his starting move, practicing his quick twitch moves. And what he was doing was preparing for his turn when he was in at the starting block. We can do that as traders as well. We can practice in our mind, visualize in our mind, what is it going to be like when I take the inevitable loss? I know I will take a loss. What will that be like? And for me, I do it through, scanning through my body. So I have a ton of videos on this if you're interested, but thinking about, how does it feel physically in my body when I take a loss? Okay, I know for me what that feels like. And then I work on calming it down. So regulating my heart rate, regulating my breathing, make sure I'm sitting up, shoulders back, head lifted, thinking about the emotion that I'm experiencing, and then visualizing myself turning it down like I'm turning down the radio the knob on the radio. So it's fine to have the emotion, but just turn it down a little bit. And then finally cycling up to my thoughts. Like, what am I hearing in my head right now? Like, take a moment, pause. What are the thoughts? You can do this ahead before actually trading. What are the thoughts that will be in my head at that time? Most likely, you know what those thoughts are going to be. And if you don't know, as you're trading today, pay attention to that. When you have a loss coming or you're in the red, what are you thinking? Oh my gosh, I don't know what I'm doing. Oh, wow. I thought one thing was happening and it looks like I'm going to get stopped out. So clearly I didn't know what was going on here. I'm never going to make it as a trader if I take losses like this. I'm going to lose this account, right? Whatever those thoughts are, paying attention to that and then combating those thoughts in the moment. And you can prepare ahead as well. So thinking about, okay, I can hear those thoughts in my head. I know what they sound like. Pay attention to like the quality, like what is it like a mean bully voice? Is it like this quiet, scared voice? You know, what does it sound like? And then think about, okay, when that happens, this is what this is the thoughts that I am going to allow. This is a valid trade. I risked appropriately. Every trader takes losses. Losing is part of the game. I have to be okay with losing if I want to be a trader. And you can even say it out loud. And it can help to say it like you would say to a child. And the reason is when you talk to a child and you're educating a child, hopefully you're not yelling at them. What are you doing? That's terrible. How could you take a loss, right? You generally slow down a little bit. You lower or soften the quality of your voice, and you can say it to yourself out loud. This is a valid trade. I risked appropriately. Every trader takes losses. Losing is part of the game. And most importantly, I have to be okay with losing if I want to be a trader. And saying those things out loud, excuse me, can be really, really helpful to kind of like wedge it into your brain and really get it in there. And, you know, it can really help slow you down, keep you from doing things that are going to be damaging, pushing the buttons without thinking. Saying it out loud, if possible, is really powerful. And then Phil said what it says in the book, Trading in the Zone. Is it not possible to trade without emotions? The book seems to suggest it's possible. Emotions are a like defined thing. So like you can be hooked up to a system and they can assess your emotion, right? Because it is a specific thing. It's heart rate changes, it's respiration changes, body temperature changes. It's a physiological process that happens in your body. Whether or not you can do something, trading anything without emotions is kind of irrelevant because it doesn't matter. You can still have emotion and not have it impact you. So not have it interfere. In fact, there's a study where they looked at high-level professional traders like in, you know, major corporations, and they found that even those traders had those physiological changes when they were trading. You can work on controlling your body. Like I have an aura ring, and a lot of times when I'm trading, I'll actually go from like stressed to relaxed. And you can work on that where you are trying to train your body to actually chill while you're trading so that you're in the flow and that you're in a calm place. But it doesn't have to be without emotion. Emotion is not your enemy. Too much emotion can make it really difficult to stay logical and rational, but you don't have to trade without emotion. I'm not a big sports fan, but I'm a huge sports psychology fan. And there are so many great documentaries right now on sports and the mindset with sports. I'm going to be starting a series on my YouTube channel looking at these, but one of the absolute best ones is it's called Face Off Inside the NHL, and it's about professional hockey players. And the third episode is the best one. It's about a goalie named Swayman, and he is like this nice guy. They call him like this nice guy from Alaska. But man, when he plays, there are times when he is ugly. He's got nasty emotion, and he uses that emotion to fuel. He's not always like that. A lot of times he's very cool and calm on the ice. But sometimes, especially when he's playing against certain players, he lets his emotion get raw, and that's part of what he's doing. So I think it's a fallacy in the trading community that you have to trade without emotion. I personally think it helps a lot when we stay level and we stay balanced, but you don't have to do that. That's up to you. You can be a good trader either way. I just think it's a lot easier if you can find a way to stay level.
I like this one a lot because I resonate with this one, and perhaps a lot of people in the audience as well. That it is, there that distinction about our emotions depend on what we. There's also an input of us in our emotion, what we do with them, right?
Right.
As to how much they affect our life. The event don't necessarily cause the emotions and the consequences of those emotions being with us. It's us doing something with those emotions, and that's exactly the link, I believe, and that's something as a human being, not necessarily as a trader only, but as a human being. We say we take control over our emotions, but I'm not sure if that's completely correct. We decide not to act upon them, or we decide not to focus upon them. But since, as long as you're breathing, you're probably going to feel something, I would think, right?
You would
You
hope
just
so.
but you decide not to act upon it. You decide to focus on something else, right? I recognize that outside of trading on myself, and I think it's um a great way to. And the first thing comes with awareness, right? Thinking about what you're feeling. That's the first thing, to be able to do anything about it, whether to act upon it or not, or whether to redirect your focus or not. First, you need to know if you're feeling something and what is it, and why you're feeling something. So, what would you say? How would you what would you say about this statement, this Stoic Greek, very popular and very timeless statement? It's not the event that upsets us; it's what our mind tells us about the event that upsets us. What would you say to the trader? How can they use this statement to their advantage? Becoming a good trader.
Yeah. Thank you, Phil, for sharing this. I absolutely love this. And this is everything in trading. This is absolutely everything. I always hear people talking about emotion, 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 emotion. That's what psychology is. No, that is one piece of it. That is one piece of it. In my opinion, hands down, the most important aspect of psychology for us, because it's what we can control, is our thinking and our thoughts. And that's what he's referring to here, is it's our interpretation about the event that matters. And that is what makes us human. That's our logical, rational brain. We have really, really great power as people, as traders, as people, to control our experience and to impact and influence our experience by the thoughts that we allow ourselves to think. Emotions are automatic and natural, and you can have a hand in managing them, but they will happen to you no matter what. Whereas your thoughts are 100% in your, as long as you're rational, logical, you're in your right mind, you can control what thoughts you allow to enter into your mind. And that's not to say you'll never mess up. sometimes you'll think ugly things about yourself, like, oh man, I'm such an idiot, I can't believe I did that, or I look terrible today, or I'm, nobody likes me, or any of these like crazy thoughts that we can have about ourselves. The question is, do those thoughts serve you, and do they get you closer to what you want? And if that's not the case, then you need to think about, okay, I need to look for proof that discredits those thoughts. I think it was Andre that said, asking, is this true? Is this thought true? And I think another element of that is to say, is this helpful? So I like to frame it as, does this serve me? So maybe it is true that, whatever negative thought I'm having about myself, maybe it's true, but maybe I can find some counter that is better. So a thought that will serve me better. If that makes sense. I'm trying to think of something off the top of my head, but like if I say, oh my gosh, I am so unprofessional as a trader, maybe that's true, but that might not be serving me right now because it's not propelling me to where I want to go. So maybe I can find a way to frame it in a way that serves me. So let's say I've been really unprofessional. Instead of saying, oh my gosh, I'm so unprofessional, maybe I can say, excuse me one second. Maybe I can reframe that as, I've made a lot of progress and I'm a lot better than I used to be. I'm still unprofessional, right? But a thought that serves me is, I've come a long way.
Yes.
And so we're always looking for ways to use what Phil is mentioning to our advantage, because if both of us get stopped out, Victor, if both of us get stopped out and you're like, whatever, it's part of trading, and I go, oh my gosh, I got stopped out, I must not know what I'm doing, I'm going to lose this account because I'm such an idiot, that's not helpful. That's not serving me. Even if I do end up losing the account, that way of thinking is not going to serve me. And so I need to constantly be on guard as a trader. I have to double down on my thoughts, because that is what's going to inform my experience.
Yeah, that is very true. I think I think on a personal note, one of the things that our framing in general is very, very powerful. It can change something from negative to positive, and the vice versa, or the other way around. Since we're not going to reach perfection, because we're humans, we will still have imperfections going forward forever. Instead of looking at what we're doing wrong, we can focus on what we are already doing better. And one of the ways that's exactly what you said, but that's one of the ways that I applied this in my journaling is I measure let's say, how well or how many mistakes I made in my process, and I quantify that. And of course, I'm going to feel bad if I focus on those numbers, because they're wrongs, they're mistakes, they're losses, not necessarily losses in P&L, but they're things that I didn't achieve, right? They're little failures, if you will.
Mm-hmm.
But if I compare that, if I have a graph and I compare that how I was 3 years ago, or
Right.
5 years ago, or 2 years ago, suddenly I'm improving,
Right.
instead of I'm failing to
Yeah.
to be failing to hit all the check all the boxes into whatever list that I need to finish. But I'm improving now. It's different. An improving trader is probably going to be a successful trader, you would think, someone would think.
Absolutely.
But in someone who is missing, the not following the rules all the time, may fail, right? So it's completely different, but it's completely different framing of the same thing. The number of mistakes that I would do, or that I would look back into on my journal, didn't change, but the way the value and the interpretation, the meaning that they have to me in my mind and how it makes me feel completely changes everything by just changing the perspective, the point of view where you're looking, half full, half empty, as they say. But it's
Yes.
true. It's that kind of changing. Everything is relative, right? If you have the adequate reference to measure yourself, changes everything, right? If you're comparing yourself to perfection, you're gonna feel quite miserably most of your time, because how many times does a pitcher throw a no hitter game in baseball? How many times does it happen on their career? Some people don't even never reach that, right? That's perfection as a pitcher in baseball. But if that's the reference, most pitchers will be miserable during their whole career.
Right.
So it matters a lot what your reference points are when you're, gauging yourself or gauging your performance. I find this, I keep saying it, but very fascinating. And I didn't do anything when I'm in college. I didn't do anything with psychology necessarily.
Mm. Really? That's interesting. They didn't have you take any psychology classes.
Well, actually, I did, but I didn't choose to. I mean, it was something.
Oh, gotcha.
Yeah, it wasn't an interest of mine. Let's say, so
Yeah.
to speak.
I can understand that. It doesn't always seem like it's practical relevance, I guess. And so I can understand why you'd maybe avoid that one. But somebody said, Alex said here, on the other hand, at a live roulette room, I once witnessed going 14 times in a row black. And that's the thing about trading too, right? It's like these things can happen. And a lot of time, most likely I would assume that when that happened, the thought wasn't, wow, this person is like genuinely has, outsized luck or something like that. It was probably just, they just probably thought, that happened. But when it comes to trading, we tend to think that whatever improbable outcome happens, it has something to do with us. And maybe when they did the roulette table, maybe they thought, wow, that person's crazy lucky. But the reality is, those types of things can just happen. And it's not impossible. But when it comes to trading, it doesn't necessarily mean anything about us specifically.
Yeah, and I have another thing, Diana, that to me, when maybe I've mentioned this already in the past, but one of the things that, because I mention this all the time, especially in our workshops, we have workshops in the 5ers on Discord, that we tend to think that whatever is happening in price with our position has something to do with us.
Yes.
Like, we tend to have, it's a misconception to think that we can, on a logical level, we know that we have no control of the market.
Right.
But on some other level,
We
somehow,
believe, yeah.
we believe that
Right.
maybe if I do this, I'm gonna win,
Mhm.
or if I do that, I'm gonna lose. That's such a fallacy to think that way. And it's, to me, it was very liberating
Mhm.
a long time ago, and it helped me so much in my trading when I got the full extent of that realization that once you put the trade on, your influence on the outcome isn't there anymore. There isn't anything
Right.
you can do to change
It
it.
never was.
Now
Yeah.
there wasn't. The only control,
Mhm.
the only thing you can control is up to the entry. Once
Yeah.
you enter, that's it. The
Yes.
dices are rolled, and your probability don't change whether you do something or not. And even For example, I mentioned this recently. Depending on how, let's say, how much risk you're putting to the trade, you're probably going to be attending or managing the trade differently because it has different meaning to you.
Right.
But the question really is, should that be that way? Because if you're taking, the trade earlier off because it's, making you lose more, or maybe it's, you have some profit, some outsized profit, that you're not accustomed to see. But when the trade is smaller, you let that wind run.
Mm-hmm.
What changed there? Was it your probabilities? You said in the first one, because you have a bigger volume, a bigger trade, does that mean that it has, better probability or less probability? You have to take it earlier? Of course not. The market doesn't look at how big that trade is, right? For the odds to be different, whether it's going to reach TP or not. It is us. It's all about us, how we perceive, and the meaning and the value we give to winning or losing. And we, by when I started detaching my feelings, my meanings of the outcomes, and I only started using price and only price, not emotions, not meanings, not, if this is hits TP, I'm going to pass this prop firm account, I'm going to get paid out, I'm going to get this amount. When I detach myself from those things, and the trade, I notice a very different uh, um, 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 improvement in my P&L and my performance, because I was actually using relevant input for my decisions. My
Yeah.
emotions were not relevant. I mean, they're relevant for my feelings, but they're not relevant for, the probabilities and managing the trade better. If anything, they're indicating that perhaps I'm risking too much.
Right. Yeah, absolutely. I love that, because if you weren't risking as much, you wouldn't have the same emotion, or at least the
Exactly.
same level of emotion, probably.
Exactly.
Absolutely.
Exactly. That's there's so much to learn about our psyche, about our psychology, and how it helps, and a lot of times impedes us from reaching our goal in trading and in life in general. That it's so helpful to get a better understanding of these. And the funny thing is, we all have, it's not something optional. We all have feelings. We all have
Right.
thoughts. So why not become better at managing them, and managing the our how they affect our decision making, right? Because
Mhm.
that's basically what it is. The emotions, they affect our decision making, because we become emotional, or we try to avoid pain and don't stick to the plan or whatever. When we manage that is when we can get, the trade plan to be executed better.
Mhm.
The Someone said it right here: process over P&L. This
Yes.
is that's the to me, that was one of those big realization, where it doesn't matter, the P&L doesn't matter, right? How, if I'm in profit or not, shouldn't be any input in my decision making, other than the trade plan was made for a reason, right?
Mhm.
It's based on data, and in that data, one of the input wasn't how I felt during data testing. So
Right.
why am I consulting my feelings to decide whether I'm gonna take the trade off because it's a big size or not? That doesn't make sense. But somehow that's very, we tend to do it almost naturally, to assume it has something to do with what we feel, when in reality it doesn't.
Right. Yeah, that's a lot of times traders will say that in forward testing, their edge plays out just fine and they have no trouble. And then they go to either a prop account or a personal account, and that's where they experience issue. And part of a big part of that is because our emotion is different. And if we're in forward testing, I still experience some emotion when I'm in forward testing, but certainly not as much. But one of the things that you can do is sort of, we talked earlier about desensitizing yourself to losses. A fighter pilot, they fly jets, but before that, or even while they're doing that, they'll do simulation where they go into a big simulator box and they will, practice flying. And it's not the same level of emotion, but it is, you're still going to experience elevated heart rate, change in respiration, sweaty palms, those types of things that kind of simulate what it'll be like when you're actually in the jet. But my husband was a fighter pilot, and he told me that even before simulation, there's another phase that comes before that called chair flying, which is they sit in a regular chair, close their eyes, and imagine the controls, and think about, like, what does it feel like? What is this going to be like? See the stuff out in front of you, and really try and, as best as possible, put yourself in that situation. And your brain does not know the difference between imagined and real. And so you can elicit that same type of emotion and that same type of experience. Again, it won't be as strong and potent as when you're actually flying a jet and you are in that situation live, but you can help yourself start to prepare for that by utilizing those three aspects. Those are all valid parts of training to be a fighter pilot. The real deal, the simulation, and the chair flying are all integral parts. And as traders, a lot of times we like to say, oh, it's only the real that matters. This doesn't really count, and this certainly has no value. And that's just not the case. It's different, but they all can be an important part of becoming that, the best pilot that you can be, or the best trader that you can be. And somebody's asking if I can share videos on how to physically go through a loss. If you search my YouTube channel, I have a ton of them. My little avatar, I don't know if you can see that. It's like a little superhero type looking avatar. And I have a bunch of playlists called like the pre-trade routine and trading psychology, all about taking you through the process of preparing your body and your mind for going through losses, and little tips and tricks that you can do to get yourself, in the best place possible to trade, not necessarily without emotion, but with management of your emotions, and especially control over your thoughts. Because again, remember, your brain does not know the difference between real and imagined. And so you can tell yourself that you have confidence and that you know what you're doing, and your brain goes, okay, I'll just believe it. So that's something that you can work on to really help you with your trading.
That's awesome. That's awesome. I think it's such a breath of fresh air hearing all these tips and insights from you, Diana, because they are so much needed in the trading community. I really think so. I think the people in the audience, the 5ers community is fortunate to have us join this team. We are at the end of our live stream. Are there any other questions that you think we should address before we wrap this stream up?
So okay, I'll leave you with two things. One is Steph Curry, there's a video of him, and the whole point of the video, I have it as a short on my YouTube channel. And the point of it is to see what it looks like when he misses a shot versus when he makes a shot. And what the person is pointing out is you cannot tell from looking at Steph Curry if he made the shot or he missed. And the reason for that is because it's just part of the game. He's not reacting. Obviously there's going to be times when Steph Curry is going to like lose his composure in his head, and he's going to react. But the goal, the standard that you're looking for is that when you get done with trading at the end of the day, your spouse or your kids or whatever, they should have no idea how your trading day went. You know, like that is where you want to get to, where it's just like, it is just part of the day. I think that's really powerful, and it is a really, you know, again, hard to achieve, but, you know, really what we're looking for is just to be indifferent to the wins and losses, if possible, as much as possible. Again, not that you can't have emotion, but you're trying to achieve that balance and achieve that level where it's just kind of another day in the office. That's the first thing that jumps out to me. And I lost what the second one was, but I'm just zooming through these questions. Thank you so much to everybody in the chat. It's been really fun having such an engaged group in the chat. Makes it so much fun to chat about this stuff, and we've had a lot of really good insight from people here. So really appreciate that.
Perfect. I'm sure by the activity, the level of engagement, it actually tells me something. It tells me that many traders, many people in the audience, they are, of course they are, but they are actually, it's impactful for their trading, so much so that they're, you know, they want to know about it. They want to ask you, they want to put their questions out there because it matters to them. They understand how important this is, and how much it is affecting their trading, and that's the engagement. I think it's and that's the importance of having you here, Diana. I would like to thank you for, I truly enjoy these moments with you. I look forward to them, and it's always fun to spend some time with you.
Thank you, Victor. That's so nice. And I hope you continue to stay healthy and get better. And I look forward to meeting with you again next week.
Perfect. Same to you. Best health, better, get better, get soon better. Do you say that?
Better soon. Yep. Get better soon. Thank you so much. Appreciate it.
All right. So, people in the audience, if you like this content, if you like Diana, do you like Dirk, Jonathan, myself, and the other hosts on other days of the week, you enjoy any and or maybe most or maybe all of our content, hit the like button. It means a lot to us. It gives us the signal to keep on putting time and effort, bringing value to you so you can become a better trader. So don't forget, hit the like button and subscribe to our channel. This is our stream for today. See you tomorrow again. I'm going to choose, before I close the stream, I'm going to choose the let's see, the outro, because I see that, yes, here we are. So that's it for today. Bye bye.
Thanks, everyone. Bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.